The yield 0.63%. The yield on the 2-year 0.20%. NYMEX crude oil is down 5.6% on $1.10 to $18.77 a barrel. COMEX gold is down 1.9% or $32.50 at $16.9920 an ounce, and the euro 1.0823 against the dollar. And straight ahead, we have the latest world and national news, and this is Bloomberg.
All right, Karen, thank you. 6:33 on Wall Street, and Michael Barr has more on what's going on around the world. Good morning, Michael.
Good morning, Nathan. Business in New York and New Jersey will stay closed until mid-May. The infection rate is slowing, and the daily death toll has dropped, but New York Governor Andrew Cuomo said the lockdown in the state would continue.
Why don't you open tomorrow? Because we're afraid the infection rate will go up, and everything we've been doing is to slow the infection rate.
Starting today in New York, people are required to wear a face covering while outdoors and stay within 6 feet of others. That includes while in for hire vehicles. For the first time since the coronavirus peaked in New York, the state's rates of hospitalizations, ICU placements, and intubations are down. Nursing homes across the U.S. are seeing clusters of COVID-19 patients, and many are reporting a high number of deaths. In New Jersey, one nursing home had 17 bodies crowded into a morgue that was only supposed to hold a few people. Governor Phil Murphy expressed his outrage at the situation.
I've asked the Attorney General to look into this matter, as well as to do a review of all long-term care facilities that have experienced a disproportionate number of deaths during the COVID outbreak. And I know he will take any and all appropriate action.
More than 60 people linked to that nursing home, the Andover Subacute and Rehabilitation Center 1 and 2, have died, including staffers. Presumptive Democratic presidential nominee Joe Biden says President Trump's plan to reopen the country is not the leadership he was looking for.
I wouldn't call it a plan. I think what he's done, he's kind of punted. He's decided that he doesn't have the right to make the call for the country.
The former vice president also told donors that a trio of high-profile endorsements he got this week from former President Obama, Elizabeth Warren, and Bernie Sanders has triggered a surge in fundraising. Biden said his campaign raised $5.25 million so far this week. Biden and the Democratic National Committee combined for $26.2 million at the end of February, a small fraction of the $225 million that President Trump, the Republican National Committee, and their joint fundraising committees had amassed through the same period. President Trump's former lawyer, Michael Cohen, will be released from federal prison to serve the remainder of his sentence in home confinement amid the coronavirus pandemic. Cohen is locked up in Otisville, New York. Cohen pleaded guilty to numerous charges, including campaign finance fraud and lying to Congress. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
Okay, Michael, thank you. It's almost 6:36 on Wall Street. Time for the Bloomberg Sports Update with John Stashower. Good morning, John.
Good morning, Nathan. The NFL has, in the last 2 days, had its first 2 active players test positive for COVID-19. The day after Rams center Brian Allen, now it's a bigger name. Von Miller, the Denver Broncos, one of the NFL's top defensive players. He suffers from asthma, says he may have contracted while training in the Bay Area. Dr. Anthony Fauci earlier this week said he's in favor of sports' return without fans, and with testing. He was asked about it yesterday at the White House.
It is conceivable that we will be able to do that. I think there will always have to be attention to making sure that we don't do all that packing in together. I think we'll be able to have sports events in that phase where you actually have participants there.
President Trump spoke Wednesday with all of the commissioners. Governor Cuomo spoke with Mets owner Jeff Wilpon about the when and where of baseball's return. Minnesota Vikings are denying their wild rumors that they're going to land Odell Beckham in a trade with Cleveland. Denny Avdija is heading for the NBA as a 19-year-old projected as a top 5 pick of the draft. He's been playing professionally in Israel. Jacob Toppin, whose older brother Obi was the college player of the year at Dayton, is transferring, going from Rhode Island to Kentucky. The Toppins, both born in Brooklyn, went to high school in Westchester. April 17th, this date in New York sports history, 1964. It was the Mets' first game at their new home, Shea Stadium. They lost. They did that a lot back then. Lost to the Pirates 4-3. John Stashower, Bloomberg Sports. Nathan?
Thank you, John. 6:37 on Wall Street.
The following commentary is from Bloomberg Opinion.
How to fill the hole in your retirement plan. I'm Barry Ritholtz, a columnist for Bloomberg Opinion. You've been diligently working, saving and investing for retirement. You put in 40 hours a week for 40 years. At long last, you get to kick back, fish, whatever. Then the pandemic hit. The economy tanked, the stock market fell 35%, bond yields disappeared. Now what? We have lots of suggestions. Let's start with this one. Your fixed income risk. The lesson of 08-09? Don't chase yields. It's foolish and expensive. Bonds are supposed to be the low volatility ballast in your portfolio. Stick with investment grade, like high quality corporates. Use tips as a hedge against inflation. In the tax-free municipal market, look for general obligation bonds from entities that are not overly indebted. Just because the Federal Reserve is now buying junk bonds doesn't mean you have to also. I'm Barry Ritholtz. For more opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
You can hear Bloomberg Opinion commentaries every weekday at this time, and terminal customers can read more at OPIN Go. It's just before 6:39 on Wall Street and time for the Bloomberg Green Report. Here's Bob Moon.
Odd but true, the coronavirus pandemic has gutted power demand to the point that utilities in Europe have ended up paying customers to use electricity. Brief periods of negative prices have become common in Germany and the Nordic region during some hours on holidays or weekends. Now, the widespread shutdown of factories to stop the spread of the virus is accentuating the phenomena. Prices turn negative at times of the day when there's more supply than demand, meaning either some generation has to stop or consumers need to switch on. Sometimes it's cheaper to pay consumers to use power than it is to shut down and restart a power plant. Price swings to the upside are possible too, especially when solar generation unexpectedly drops off and creates crunch points. Predicting the public's behavior during lockdown has become more difficult. People aren't doing the same things at the same time anymore, and historical demand models need to catch up. That's the Bloomberg Green Business Report. I'm Bob Moon.
All right, thanks, Bob. Now some other stories we're following. Cantor Fitzgerald is breaking with its Wall Street rivals on job cuts. The financial services firm run by Howard Lutnick is cutting hundreds of positions. The reductions, are the deepest in the industry since the coronavirus outbreak began. Shares of Boeing are higher by more than 9.5% in early trading. The company unveiled plans to restart manufacturing in the Seattle area next week. That would end a shutdown that began last month due to the pandemic. And in Europe, car sales dropped the most on record last month. New car registrations plunged 52% as showrooms closed to help contain the COVID-19 outbreak. Production was also shut down across the continent. S&P futures higher by 86 points right now. Dow futures up 772. NASDAQ futures a gain of 197 points. 10-year is down. 2/30 seconds yield 0.63%. You're listening to Bloomberg Daybreak.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg Pursuits look at luxury.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is a message from the government. Coronavirus is a national emergency. Life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work. But only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
Because you can't watch Trolls World Tour at the cinema, Sky Store is bringing the cinema home to you with Sky Store Premiere.
I'm going to destroy all music, except for rock!
We need to unite the trolls to save all music.
Our brand new service that lets you watch movies at home that would normally be in the cinema.
Rock and roll!
Let's go save the world!
Yes! Prepare for battle.
This ought to be good. Enjoy Trolls World Tour now on Sky Store Premiere, bringing the cinema to you.
We know you don't have other plans tomorrow. That is, unless you already marked your calendar for One World, Together at Home, a night of music and action in response to the COVID-19 crisis. Turn on TuneIn beginning at 2 p.m. Eastern, 11 a.m. Pacific to hear live performances by Alanis Morissette, Elton John, Billie Eilish, Paul McCartney, Eddie Vedder, John Legend, Casey Musgraves, Keith Urban, Chris Martin, Billy Joe Armstrong, J Balvin, Lady Gaga, Lizzo, Maluma, Stevie Wonder, and more. Search Together at Home on TuneIn to join the live stream tomorrow at 2 p.m. Eastern, 11 a.m. Pacific.
Of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report coronavirus update. President Trump has given governors a roadmap for recovering from the economic pain of the coronavirus pandemic, laying out a phased approach to restoring normal activity. Governors in some areas of the nation will move faster than others.
The president did say he believes there are some states that could start doing this right away, that they do not have to wait for the end of April and wait for those guidelines that they put out in recent weeks to expire. They can go ahead and move ahead with these new phases.
There's Caitlin Collins. President Trump has indicated many states can reopen by May 1st. Governor Cuomo in hard-hit New York State extends stay-at-home restrictions through at least May 15th. The governor of Delaware, John Carney, joins New York in keeping social distancing in place.
We're not in the position to even be at the starting line where you have to have 14 days of declining cases.
Governor Carney, I'm John Trout.
They don't just talk to the most important people.
Is it as ominous this time around?
They talk with the most interesting people.
Are they taking this seriously?
Bloomberg Markets, weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Stocks are advancing along with U.S. stock index futures as tentative steps toward restarting the world's largest economy helps investors look past mixed progress on curbing the coronavirus and dismal data from China. We check the markets every 15 minutes throughout the trading day on Bloomberg. Right now, S&P futures, they're up 82 points. Dow futures up 751 and NASDAQ futures up 195. The DAX in Germany's up 4.1%. 10-year Treasury down 1/32. The yield 0.63%. The yield on the 2-year 0.20%. NYMEX crude oil is down 5.5% on $1.09 to $18.78 a barrel. COMEX gold down 1.7%, down $30.10 at $17.0160 an ounce. The euro 1.0828 against the dollar. British pound 1.2448 and the yen 107.78. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, President Donald Trump has given governors a roadmap for recovering from the economic pain of the coronavirus pandemic, laying out a phased approach to restoring normal activity. The new guidelines are aimed at easing restrictions in areas with low transmission of the coronavirus while holding the line in harder-hit locations. Federal officials warn that some social distancing measures may need to remain in place through the end of the year to prevent the new outbreak. Spain reported the biggest increase in the number of confirmed coronavirus cases in more than a week. There were 5,252 new infections in the 24 hours through today. That pushes the total close to 190,000. NFL star Von Miller has tested positive for the coronavirus. His agent says the Denver Broncos linebacker wanted to come forward with his diagnosis to show doubters how serious the disease is. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
Okay, Michael, thank you. We are live from the Bloomberg Interactive Brokers Studios where it's 6:49 on Wall Street. Time now to check what's going on in D.C. Some of the top stories in the nation's capital include small business relief running out of funds in the federal coronavirus stimulus program. The House considering letting members vote by proxy as the pandemic continues. And Joe Biden getting a surge in fundraising after 3 key endorsements this week. Also making news, of course, the new guidelines from the House that could have some states opening in weeks. For more, we're joined by Bloomberg U.S. politics editor Kathleen Hunter. So now we've got this phase 3 rollout, or 3-phase rollout from the White House that kind of leaves things up to the states, doesn't it? After the president just a few days ago claimed total authority in reopening the country.
Yeah, Nathan, I'd say to characterize it as a bit of a change of tune on the president's part would be an understatement. We did hear him essentially say that he has complete power to dictate when and how the U.S. reopens, specifically more so than governors, and that seems to be very, very different from the gist of the guidelines that we saw released yesterday, which leaves a lot of the responsibility for determining when to reopen and how to reopen up to states and individuals and also to corporations. So there's some question, Trump has said multiple times that he wants to see the economy get back up and running, but when and how to do that, it seems like it's going to be left to the discretion of individual businesses.
Well, that seems to be kind of status quo, doesn't it? Because the states in many ways have been sort of making decisions on their own up to this point.
Absolutely. And in some ways that sort of begs the question of, why we saw this, hullabaloo over the release yesterday of these guidelines when really, as you say, the guidelines don't move the ball all that much beyond what the status quo situation has been. If anything, it seems like the guidelines tend to sort of crystallize what the federal government has been doing so far in terms of leaving that responsibility to the states. In some ways, that does beg the question of whether or not the White House is really just trying to manage the optics of this by looking as though the federal government is offering, some guidance and some guidelines here without actually really filling in the gaps.
So is there an implication there that the president could be passing the buck, not just in terms of how economies get back up and running, but passing the buck politically in case things don't turn out the way he might like?
Well, I think that absolutely is the implication there. I mean, whether or not that's the intention, certainly that could be the effect of how the White House has chosen to handle this. You could easily imagine a scenario where a state like New York or New Jersey, for instance, that's been particularly hard hit, takes some steps to reopen and then sees a surge in cases that might cause their emergency rooms in their hospitals to be overwhelmed. And you could see the federal government coming in and saying, well, we told the states to follow these guidelines and, therefore it's the state's responsibility if it doesn't go well. You could certainly see that playing out.
So is there a possibility still, given the advice that the president is getting from his health advisors, that we could see something of a more coordinated response to the pandemic, a more coordinated reopening of the country?
I think that's possible. The Trump administration has certainly, not been particularly, the messaging out of the White House has not been particularly consistent when it comes to the federal response to the pandemic. But I think that the sense now is that really the direction in which the federal government's moving is more in terms of leaving it up to the states. Now, whether that would have been the case had the states not taken the initiative to form these sort of consortiums that we're seeing now in the Northeast, the Midwest, and on the West Coast, I think is a bit of a, academic question. But in reality, it seems as though from here on out, governors are going to be taking the lead.
In the meantime, as we potentially see those guidelines play out, there's got to be a lot more pressure, isn't there, on Congress to make a move on replenishing the federal stimulus program with the small business funds essentially running out now. Where are we on negotiations?
Well, it sounds as though the negotiators, which primarily, are Nancy Pelosi and Stephen Mnuchin, the Treasury Secretary and the House Speaker, sounds like as of, late yesterday, they were still pretty far apart in terms of coming to some kind of a resolution about what they want to do. The sort of tension there all along has been the White House and Republicans pushing for aid to small businesses, whereas Democrats have tried to say that, the provisions haven't been generous enough to individuals. And so I think that tension is going to continue to play out. I think, as you alluded to, with the Small Business Administration's loan program getting tapped out in less than 2 weeks, just 13 days, I think that underscores the need that's out there and that's being felt by small businesses to get some of this assistance, actually into their bank accounts. I think that does absolutely raise the pressure on the White House and Congress to come to some sort of a resolution, but we know Congress isn't going to be back in session for another 10 days or so. And so I think that is more the time frame that we could be looking at for something to start coming together.
We've only got about 30 seconds left here. There's really a question still about whether the House can even vote with the mechanics of having to have members on the House floor to cast their votes.
Yeah, that is a bit of an open question. How the House is going to manage that, I think, is going to be interesting to watch in terms of the parlor game of Washington, because it's a very real problem with 435 House members, many of them also being parts of vulnerable populations because they tend to skew older. How that's going to exactly work, I think, will be interesting to watch.
Yeah, we'll be watching it for sure. Bloomberg U.S. Politics Editor Kathleen Hunter, thank you, as always. Karen?
Nathan, thank you. It is 6:55 on Wall Street. It's time for the Bloomberg Small Business Report with John Tucker. Good morning again, John.
Hey, good morning, Karen. We are examining the impact of coronavirus outbreak on small businesses. Today, let's look at the seafood industry. It's getting hammered all over the world, including on the Jersey Shore. That's where we find Lusty Lobster in Highlands, New Jersey. Doug Dowdy owns the company. He runs it with his brother. They sell seafood as both a wholesaler and a storefront. Doug, tell our listeners a little more about the business and the impact that you're seeing right now.
My brother and I, he lives up in Maine. He runs our Maine operation. So he does distribution up there, and we have a lobster shack that's open in the summer. Our almost wholesale end of business came to a halt, which are the restaurants, fish markets, hotels.
That's the bigger part of the business, right?
Correct. And then the retail market, which we have a storefront, has accelerated with the curbside pickup.
Now, has that been able to make up for the revenue loss from the wholesale part of the business?
No. There are a handful of restaurants that are operating in the area that we are delivering to. People are deciding whether they're going to do, the curbside pickup, the restaurants. It's a big decision to change over. It's been difficult. One of our restaurants is thinking about changing over. He's called me the other day to make sure that we can still get product. So people are concerned about the supply, which, is tough. And we have to work hard and we have to be organized to get the products we need.
Now, why is that? Why is the supply tough?
Some docks are closed. They just can't afford to bring boats and boats of product in with nowhere to go with it.
Doug Dowdy, the owner of Lusty Lobster in Highlands, New Jersey. Thanks for speaking with us, Doug. And every day at this time, we're talking to small business owners reeling in the face of the coronavirus pandemic. Yesterday, Karen, I should note, we talked to the owner of a Baltimore-based small business that pivoted to making masks. I gave an incomplete website. It's qualitymasksupply.com, all one word. And we're going to have more for you on Monday right here on Bloomberg Daybreak. I'm John Tucker. That's your Bloomberg Small Business Report, Karen.
All right, noted. Thank you, John Tucker. We're watching earnings cross the Bloomberg right now. Schlumberger reporting the shares in early trading are up 7.5%. It reduced its dividend for the first time in more than 40 years. This is the world's biggest oil services provider, sifts through the wreckage of an historic crude market crash. Still, profit beat analyst estimates by 1 cent. Those results, though, included an $8.5 billion pre-tax charge. Futures this morning are higher. S&P futures up 85 points. Dow futures are up 784. NASDAQ futures up 199. Now, Bloomberg Surveillance is straight ahead with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential conversations from...
Because you can't watch Trolls World Tour at the cinema, Sky Store is bringing the cinema home to you with Sky Store Premier.
I'm going to destroy all music, except for rock!
We need to unite the trolls to save all music.
Our brand new service that lets you watch movies at home that would normally be in the cinema.
Rock and roll!
Let's go save the world!
Yeah!
Prepare for battle. This ought to be good. Enjoy Trolls World Tour now on Sky Store Premier, bringing the cinema to you.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
It's that score, Malkin again! Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. I mean, let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz on Bloomberg Radio.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Coming up on the program, reopening plans, fueling investor hopes. Even as China's economy suffers historic weakness, equity markets on course for back-to-back weekly gains. From the Bloomberg Interactive Brokers studio, hello Friday. Here is your Friday morning bullish price action. Equity futures up 84 on the S&P 500. We are positive 3%, 2 hours, 30 minutes away from the opening bell in New York. In the bond market, the shape of things as follows for you. In the Treasury market, yields are higher by a single basis point to 0.64% on a US 10-year. In foreign exchange in G10, a slightly weaker dollar story emerging. Dollar yen advancing by around about 0.1%, coming in rather slightly stronger Japanese yen. In the commodity market, here's a story for you. Crude at the front month. This is important. We'll talk about it a little bit later. Getting hammered down by around about 5% on the session, around about 6% now on WTI. We are at $18.64 on WTI, a remarkable move lower. Alongside Tom Keene then, I'm Jonathan Farrow, together with Lisa Abramowitz. You are listening to Bloomberg Surveillance on Bloomberg Radio. We'll get to the crude market a little bit later in the hour. Lisa, let's begin with the reasons for hope this Friday morning.
Yeah, there are a number of them, right? The number one is that President Trump did outline a path to reopening the economy, saying 29 out of the 50 states in the United States could qualify to begin the reopening process within the next few weeks. The question is, it really does lie with the governors to lay out that plan. There also was some beneficial news out of Gilead, a potential treatment, remdesivir. Am I pronouncing it right?
I think you got that one right.
Thank you. Is showing some promising things. And Boeing, people are taking confidence from Boeing restarting a plane plant, which is relatively ironic, I will say. John,
hope for the future. Hope for the future.
Yeah.
And then the brutal reality of the president as well. We have to talk about the last 24 hours, not just this morning too. The New York pause, we're calling it a pause, extended to May 15th. The UK, the lockdown goes for another 3 weeks. The SBA loan program is out of money. And we've had 22 million people unemployed in 4 weeks, in a single month, wiping out a decade of jobs growth. So it's the hope about the future mixed with the brutal reality of the present, Lisa, and the market's trying to capture something in between.
Yeah, I got to say, hope is the presiding sentiment, because we did get that GDP data out of China, which was worse than people expected, right? The first contraction since 1992 of the world's second biggest economy. A lot of people seeing the economy not restarting as quickly as possible, but people saying, well, it could have been worse, right? I mean, everyone's trying to look for the silver lining just based on how beaten up things have gotten. And the question is, will that hope get confirmed by fact? And that has yet to be seen, John.
Well, if you trust the data out of China, let's just take a look at retail sales. Retail sales for an economy that is slowly reopening in the month of March, still really, really disappointing. And I think this speaks to, Tom, how fragile the consumer is going to be as these economies slowly make their way towards normalizing over months and months, not weeks.
You nailed it, John. It's exactly what I did when I looked at the Chinese data here last night. It's a 7% negative statistic, but retail sales, I believe, were negative 16%. It's one data point and all that, but I still go back to Econ 101, John, that within our economics, you've got to look at the elephant in the room, which is 70% of the economy was the consumer, and that's got to be the partial differential of recovery. And it's a mystery. It's a huge mystery how the restaurant that you and I go to 4 days a week,
just the 4.
Well, the fifth day we go to the bar underneath where you live, that Irish bar. We hope they're all doing, we make jokes about it, folks, but the carnage here in New York City to restaurant and bartenders has just been brutal.
Oh, and
absolutely
beyond.
Brutal.
And beyond, across the country, across the planet right now. And I think one thing we can all agree on is it's much quicker to destroy jobs than it is to rebuild. And many people have come on this program and said that. We need to do a couple of things over the next couple of hours. Lisa mentioning that drug over from Gilead. We'll catch up with the Bloomberg Healthcare team a little bit later on this program. Looking forward to having a conversation with Drew Armstrong. And we need to get straight to the market because we have a rally on our hands this Friday morning. Equity futures up by 3.2%. We can catch up with a good friend of this program, Tony Dwyer of Canaccord Genuity. Tony, you've been quiet for a solid week. Where have you been?
I don't know. I don't feel so quiet. So I'm in this funky position because we've been expecting a relief rally and we got it. Like, we got a relief rally that is historic. We've retraced about 50% of what we've lost during the 34% crash in March. And that really is extraordinary. So I'm trying to figure out if a tactical rally, meaning based on an oversold condition, hope, if that's going to become a fundamental rally, and I'm not clear on that at this point.
I look, Tony, at the equity markets in what I perceive as a narrowness of this rally. How narrow is narrow?
Well, the last 2 days have seen the downside volume significantly outweighing the upside volume. So you had two really bad, quote unquote, market days, but the mega cap tech was leading. So the thing that's the most interesting about that mega cap tech at this point is it's actually considered defensive. So for those that have gone on offense, right, we downgraded the market, as you guys know, in January, and expected once you got that panic low, which was identifiable, we expect a relief rally, and we got it. It's been a lot more than I thought it would be, but the wrong groups are leading it. If you're expecting a good fundamentally driven bull market, they usually are kicked off with small cap stocks leading, with offensive sectors like financials, industrials, consumer discretionary, with those areas leading but they're lagging. So basically, to make it very clear for the listeners, because this sounds really complicated, coming off of a major bear market low, you want to see the more aggressive areas do better. But that's not been the case in the rally, and that was evidenced, Tom, as you suggested, by the narrowness of the last couple of days.
Tony, as you talk, it strikes me that perhaps we can look at this in another way, that when we say the stock market is rallying despite the horrific data that we keep getting out of the real economy, perhaps this is a couple of key tech names that are rallying while the rest of the stocks completely lag behind. The small caps down 25% year to date, and it doesn't necessarily indicate anything positive, even hope for the economy in the months ahead. Is that a better way to understand the rally that we're seeing in equities right now?
Yes, it's really born out of an extreme oversold condition when everybody got too bearish all at once. And that's what we identified as, quote unquote, the panic low. You kick off at human nature. There's times where human nature is the driver of the market activity, and then there's times where fundamentals. For the last 10 years, it's been a fundamentally driven, positive credit backdrop, good earnings driven rally. Right now, it's basically everybody got too short and too out of the market too quickly.
Okay, but where are we right now? On this Friday, everybody's going to go home this weekend like John Farrow and try to figure out what to do with their 201k.
I'm not sure anyone left home, Tom.
That's true. What? That's true. They think, oh, excuse me, lost my head. I went out yesterday for the first time in 10 days. It was amazing.
How was it?
I was fully protected.
I hope
Hazmat?
So. Yep, I had a hazmat. Yep, I had the two things on the side, and vet bill had the same thing.
Yeah, I was about to say.
It was there. Tech came over to tweak my.
Get back on track.
No, Tech came over. They
Tony's
were dazzled.
Still there.
They met vet bill. They were more interested in vet bill than me. Tony, I want to talk about what I do this weekend with my 401k allocation. How enthused are you to reallocate right now, to rebalance right now?
I'm not real enthused. I would have been down 34% despite the economic backdrop because that was down too far too fast. Now I think we've gone up too far too fast. So again, Tom, you do not want to bet against the guys printing the money. The Fed told you they're going to continue to support everything but stocks. Don't bet against. I would not bet against the market. But at this point, I also wouldn't chase the kind of rally, not just that it's 25% over a very short period of time, but also the kind where Lisa mentioned small cap stocks are underperforming and the more economically sensitive sectors are also underperforming.
Well, let's talk about what's working then. What's working really both in the United States and Europe, and you saw it pretty pronounced in yesterday's price action. IT and healthcare, what's lagging, what's ugly, financials and energy. Are you just saying stick with the stuff that's working?
At this point, that's the leadership. Honestly, I'd be pretty sector neutral right now. I think that there are times where you can have a high conviction call, and there's times when you don't. This is, as you guys know, we've been doing this for a number of years. I'm pretty happy to make a high conviction call when I have one. At this point, this is a tactical rally. I don't think I would chase the strength, and I think it's just a good time to just be neutral and wait for more economic data.
Tony, always appreciate your honesty, and thanks for your time this morning. I hope you and yours are doing pretty well. Tony Dwyer there of Canaccord Genuity. Let's get you some headlines, some news worldwide. We can do that this morning from New York with Michael Barr. Good morning to you, Michael.
Good morning, John, Lisa, Tom. The White House issued its guidance on opening up the U.S. economy. President Trump says about 30% of the country has not had a new coronavirus case in the past 7 days. He says through a gradual process, governors will be allowed to make decisions on whether to let healthy Americans return to work. The president says as the country reopens, there will be continued hardships and challenges ahead.
If the virus returns in the fall, as some scientists think it may, possibly, these guidelines will ensure that our country is up and running so that we can likewise put it out quickly.
In Phase 1, employers are encouraged to work remotely whenever possible. Phase 2, bars, gyms, and schools can reopen with proper social distancing. Dr. Anthony Fauci, the nation's top infectious disease specialist, says to expect to wait until Phase 3 of the White House's reopening plan before sports fans can return to ballparks and stadiums.
It is conceivable that we will be able to do that. I think there will always have to be attention to making sure that we don't do all that packing in together. I think we'll be able to have sports events in that phase where you actually have participants there.
In the U.S., there are more than 650,000 cases and more than 31,000 deaths of COVID-19. President Trump's former lawyer and longtime fixer Michael Cohen will be released from federal prison to serve the remainder of his sentence in home confinement amid the coronavirus pandemic. Cohen pleaded guilty to numerous charges, including campaign finance fraud and lying to Congress. He'll remain under quarantine for 14 days before he is released. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you very much, sir. Earnings season in full swing, and we're getting some stunning quotes from the C-suite, particularly here in the United States. Tom, this came from the United Airlines CEO, who said the following: travel demand is essentially zero and shows no sign of improving in the near term. We expect demand to remain suppressed for the remainder of 2020 and likely into next year as well. That's an airline that's really going to struggle even after this shutdown ends.
How do you seat people on the plane? I mean, basic stuff. Can I do a shout out to JetBlue?
Please do.
The last flight I took was JetBlue, and with nervous people on board, John. People were very nervous. Their flight attendants were phenomenal. That's what we're going to see coming back. Nervous people.
Really, really nervous people. I imagine it's going to continue for quite a while. Headline just crossed on a Bloomberg from the Chinese Politburo on rate cuts. This is what they had to say, just very quickly. They vow stronger policies, including reserve requirement ratio cuts and interest rate cuts as well. I imagine that will be supportive of the mood this morning, because the mood is improving this Friday. Equity futures elevated 84 points on the S&P 500, up 3% from New York. This is Bloomberg.
Message and data rate may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know, because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
At Lloyds Bank, we're doing everything we can at this time to help you manage your money.
One of the most convenient ways to do this is to use internet banking. It's both safe and secure. You can check your balance, view your transactions, and move money between your Lloyds bank accounts. You can manage and cancel standing orders and direct debits, and you're able to pay people and bills. Internet banking is covered by our fraud guarantee. Lloyds Bank. Now more than ever, we're by your side. For T's and C's, visit our website.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. We're watching shares of Schlumberger. They're up 7% in early trading after it reported a first quarter profit that beat analyst estimates. And Procter & Gamble shares also higher, up 1% after core profit beat analyst estimates. S&P futures up 82 points this morning. Dow futures up 772. NASDAQ futures up 187. The DAX in Germany's up 4.1%. 10-year Treasury down 5/30 seconds, yield 0.64%, and the yield on the 2-year 0.20%. NYMEX crude oil is down 5.4% at $1.08 to $18.79 a barrel. COMEX gold down 1.6% on $27.20 at $17.0370 an ounce. The euro 1.0841 against the dollar. The yen 107.77. And that's a Bloomberg Business Flash. John.
Karen, thank you. Thank you very much. The president outlining plans to reopen the economy. A lot of people will spend this morning arguing about why he's wrong, others why he's right. I think we need to talk about what is happening in the here and now, in the present. The Small Business Administration and its loan program is out of money, Tom. Yeah. It needs to be filled back up and fast, and I don't see the urgency to do it.
I put it in the morning TV script, and you're dead on. But between all the blather folks, there's some dead serious stuff going on, and policy and assistance. Emily Wilkins is our congressional virology correspondent and joins us now. Emily, you are down there. You're in the middle of it. All of our listeners, whatever their belief, are thunderstruck that we can't get a plan to refill the small business piggy bank. Why not?
Tom, that's absolutely something many people in Congress are focused on right now. It's been a continual discussion that we saw yesterday come up again and again. Basically, the debate is over what else needs to go in this bill, if anything else needs to go in this bill. Remember, last time there was a huge debate about oversight, about making sure that funding is going to not going to the sources that it was intended to.
Emily, I'm struck by the urgency of this and the lack therein right now to re-up the funding. There was a study by NBER of small businesses that found that 43% of them have already temporarily closed. All of those closures due to the virus. They have cut their employees by 40%. Very few of them expect to survive if this continues to drag on. How late are these congressional efforts at this point when the money is still not getting to these businesses?
We're going to see, I think, whether or not there is more reaction to the fact that funding for the PPP did run out the other day. At this point, Congress is not back yet. They are still trying to figure out ways to get back. Yesterday, they actually, Democrats were presented with an idea of proxy voting, so that might wind up helping speed up when they can pass bills, when they can pass various pieces of legislation. So that's something we're keeping an eye on. But this might not be for another couple of weeks. You saw the Senate try and pass a bill this week to fund the PPP, but the House blocked it over concerns that included various items, including oversight.
Oversight of the Small Business Administration's loan program. Is that what we're arguing over down in Washington, D.C.?
I think it's partly that, and there are partly some other oversight measures as far as where the funding is going for this. This is definitely something I think that's on the minds of a lot of lawmakers right now. I think a lot of them feel they are under pressure to make decisions on this, but I know there's also concerns that they don't want to rush to make decisions that are going to wind up in hindsight where, things aren't occurring the way that they hoped they would because they didn't include various oversight measures and think of all the way through for these very, very large sums of funding.
Well, speed is far more important than perfection at this point. If you're a small business and you're running out of money and you can't get access to the cash, you can't keep the people on the payroll. You have to let them roll off. That's the crisis that confronts us right now. Yes, we have to accept that some of this money will go to the wrong places. Emily, isn't that just the trade-off when you try and do something quickly, but the priority needs to be speed?
once again, I think that's something that a lot of lawmakers are feeling immense pressure on right now as they try and figure out what the next stage needs to be. I think we're going to perhaps see, we're definitely going to be watching to see how that increase of pressure does play out on lawmakers' timelines and on what they wind up doing. I think every lawmaker out there has expressed a sincere need to ensure that small businesses continue to be funded during this time. Yesterday, you saw calls from Democrats in particularly challenging swing states from more moderate districts really start to, go out with calls that, yes, this needs to be funded. Yes, we need to make sure that we are protecting our small businesses during this time.
When you talk about pressure, there's also a lot of pressure on President Trump to reopen the economy. He's talked a lot about how the consequences from the economic perspective could at a certain point outweigh those from a health perspective. I'm not going to get into that debate. It's a very heated one with a lot of differing figures. I'm wondering, though, Emily, what we learned from President Trump, how close does that bring us toward a steady reopening of the U.S. economy?
So yesterday, President Trump laid out his guidance for how he sees the country getting back on track. And the short answer is that there's not one answer. There are 50 different answers because basically Trump has left this in the hands of the 50 different governors. Trump is hoping that some Western states that are more rural, they've had fewer cases, can start beginning to open up within the next several weeks. He has a phase 1, phase 2, and phase 3. Other states where we've seen larger outbreaks, such as Michigan and New York, we're seeing those governors extend the rate for their lockdowns, and we're seeing them say, we are just simply not ready yet to open up.
Emily Wilkins, thank you so much.
Thanks, Emily.
Congressional reporter, just very timely there. Real good snapshot into this Friday in Washington. John, I really want to convey, I really sat down to try to re-gauge the math of this pandemic, and it was far a grimmer Thursday than I had any idea. Russia, with Mr. Putin pushing back the May 9 celebration, Germany with very difficult statistics overnight. And the one number in America that stood out, I'll mention California in a moment, John, was New York City, cases up 9.8% yesterday. Maybe it's one number, but that's not a good number. The slope of California, John, is not good. We hope lesser, but it's not good.
It's just one number. These shutdowns, we do know, will continue into the middle of May now in both New York City
Is that where you
and
are,
the
John?
United Kingdom
middle
as well.
Of May?
3 weeks for the UK. That was announced yesterday, Tom. New York City now, I believe, May 15th. Governor Cuomo announcing that yesterday too. I just cannot believe we're sitting here talking about topping up a small business administration program and struggling to get it done. I just think you have to accept an uncomfortable truth in an environment like this, that when you put programs like this together, some of the money will go to the wrong places, that some people will misappropriate the funds. It's what you don't want to see, but it happens. And if you want to act quickly, that's the downside. The upside is that you stop seeing millions and millions of people laid off from small businesses and small businesses go under because they don't have access to capital. Look, this is a really important moment, and we're dragging our feet again.
Well, again, there's been a huge amount of money so far. You've got to believe there's a like tranche coming at some point.
We'll continue the conversation right here on Bloomberg Surveillance. You are listening to Bloomberg Radio. There is a better tone to this market, much better. Equity futures are up by 2.94% on the S&P 500, positive 82 points. From New York City this morning, good morning. This is Bloomberg Radio.
"25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
This is a Bloomberg Money Minute. Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
At Lloyds Bank, we're here to help you when you need it most. So here are some ways we're helping you manage your money. We won't charge interest on the first £500 of an arranged overdraft between the 9th of April and the 9th of July. You can apply for a payment holiday on credit cards, loans and mortgages. And we'll also give you emergency access to savings in fixed-term accounts without charge. Lloyds Bank, now more than ever, we're by your side. Visit our website for terms and conditions.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg Radio, 2 hours away from the opening bell. Equity futures up 81 points on the S&P 500, positive 2.9%, heading for a back-to-back weekly gain. The first back-to-back weekly gain we've had on the S&P 500 since this rout began. In the bond market, yields higher by 2 basis points to 0.64% on 10s. And guys, let's just take a moment to talk about what is happening with crude. WTI down another 7.8% to $18.33. Now, there is a lot to talk about here. One of the things we can start with, Tom, is the divergence between what is happening with WTI and the Brent contract, and what it speaks to, in the United States at least, is not just a demand shock, but some real fears around the issues of storage.
Well, storage is everything here. Lisa, I think you're more up to speed on this than I am, and basically it's, for example, with Canada or with Fargo. I noticed, Lisa, that Fargo yesterday was at 12 cents a gallon gasoline, because there's, am I right, Lisa? There's literally no place to put it.
There was a story about Fargo. Fargo has a special place in my heart. I have lived there. I love that city. It was talking about
did you
how
go
gas
out
stations.
when you
Here
were there? Did you
We're
go
talking
out
about
like
crude
in the movie
oil
and warm up your car for 3 hours in the driveway?
My car actually died for a month because I didn't plug it in. But that is going to be a story for another time. Right now, I want to talk about crude. That basically the price right before it gets to a gas station is 12 cents on the dollar in some places in North Dakota. Yeah. And the thing here is that gas stations are basically storage facilities at this point, with some gas stations seeing 70, 80% plunges in the usage, in the pumping of their gas. Yeah. And it just highlights you can pump it. It's got nowhere to go at this point in a lot of places.
How close did we get to a 17 handle on West Texas Intermediate, folks? I believe we had 1806 was the low. That was about 3 hours ago. We've bounced off that a little bit, but really grim. Jared Bernstein's listening to this going, why am I on Fargo Radio?
I was about to say, scratching his head.
Jared Bernstein knows that Vice President Biden, of course, will probably take Fargo. We'll see how that goes in the election. Mr. Bernstein was economic advisor to the vice president and is definitive in Washington on policy. Years ago at the Economic Policy Institute and now the Center on Budget and Policy Priorities, Dr. Bernstein is someone everybody reads, right, left, and in the middle as well. Jared, John Farrell brought it up today, and John, as a British guy, doesn't understand the American ethos, the distrust of our federal system. Will that maintain in the coming weeks, or can we get a federal statement of assistance to Americans like we knew in times long past?
I think there are those who are very skeptical, as you suggested, of the government in normal times. But in times like this, people really do turn to the federal sector for the kinds of help we need meeting existential challenges precisely like this one. It's the same as in wartime. One thing we've certainly seen is a level of bipartisanship in Congress. You know, the CARES Act passed 96-0 in the Senate. When was the last time something like that happened? So at least for now, I think many Americans walking around thinking we sure need government, and probably thinking we need a more competent governance down the road.
Jared, your work was path-breaking a decade ago at the Economic Policy Institute of saying we need to get money into people's hands at certain emergent times. Why is Washington so reticent about income replacement?
Yeah, well, I think the main reason for that is just a real skepticism about giving money directly to people because of the fear that it will cause them to alter their labor supply. I think many American policymakers and economists really overestimate that, quote, labor supply elasticity that says if you give people $1, they're going to work less. Well, in fact, most people in America, their paychecks are such that they just have to keep working if they're going to get by. And by the way, right now, we don't want people to go to work. So that's one of the reasons why folks really need to put that sort of older thinking behind right now.
Usually statements, Jared, made by people who have never grown up around a working class environment and have no clue. Because most people, in fact, everybody I grew up with, wanted a job. They didn't want a handout from the government. And as you say, people are being told they have to stay at home. Businesses are being told they have to shut. Makes me wonder why we're sitting here asking questions about why Congress won't top up the Paycheck Protection Program for the Small Business Administration. Jared, why are we even having the conversation and asking the question?
Well, first of all, let me just say you're exactly right in the first part of your comments right there. In some ways, I think I'm probably a rare economist in that I started out as a social worker. And one of the first things I learned is that poor people simply can't begin to get by on the money they get, at least from the American social assistance system, maybe different in some other countries. Look, I think the scene in Congress right now is that both parties want to plus up the Paycheck Protection Act because, frankly, that money got out the door really quickly and is starting to meet some needs. But the Democrats want to add some other pieces that are quite necessary to the next phase of a stimulus plan. The Republicans are resisting. So that's what they're squabbling about right now.
So, Jared, as we have that backdrop, we have the unemployment figures that keep coming out. With jaw-dropping numbers yesterday, the sort of 5.2 million coming in a little below expectations, still mind-blowing. And you're the perfect person to speak to about how quickly these jobs can come back after you're writing Getting Back to Full Employment and the State of Working America. A decade of jobs lost in 4 weeks. How quickly can we get them back?
You know, it's really an epidemiological question more than an economic one, probably more quickly than you'd think, because at least from the information we have, many of these folks are on a temporary layoff or furloughed. So there's the potential to bounce back, but that can only happen, I believe, if we get the green light, or at least the yellow light. That's more realistic. If we get the yellow light from health officials and then from governors to do so, I do think that any reopening will be a very gradual one. But that's why the measures we were just talking about, these measures to help keep families and businesses kind of intact between now and then, so that there's an economy on the other side of this that's capable of bouncing back.
Jared, this is the key question. It's interesting to hear you say this, because I've been reading a number of reports with people expecting the unemployment rate to remain at about 10% for a prolonged period of time in the United States. Are you saying that those estimates are perhaps a little bit too pessimistic?
No, I mean, I think the unemployment rate is probably above 10% now, and I think we'll be lucky if we peak out at 20%. I know that's a scary number, but I think that's the fact of the case. What I'm saying is that if you look at some forecasts, our friend Jan Hatzius over at Goldman, they actually have kind of a V-shaped bounce back built in, but that's based on an assumption that we're doing a lot more testing and tracing than we're anywhere close to now. So I think the answer to your question is just conditional on getting the yellow light from the medical community. And if you read those folks, they're still quite skeptical because we're so far behind the curve on testing. I just think that if we do the right thing in terms of social and stimulative policy, or maybe call it relief policy, to keep households and businesses at least somewhat intact, then at least we know when we get the yellow light, there'll be an economy that's capable of bouncing back on the other side.
Jared, quickly, I've got to ask the question. The world has changed. America has changed. What's the Bernstein prediction what's a Bernstein prescription for Vice President Biden? What's he need to do right now?
You know, I thought President Obama said it well in his endorsement the other day, which is really worth watching because he actually gets into that precise question. He said he wouldn't run on the same platform he did in 2008, and we know that Biden's been very influenced by his work with President Obama. So this is the time, it gets back to your first question, this is the time where the country needs and wants an amply funded federal sector that is highly competent to meet the challenges we face repeatedly these days. 100-day floods, 100-year floods that come every 2 years.
It's amazing how that is. Yeah.
Major sectors. You know what I'm saying? I mean, we face real challenges.
Jared, we thank you so much. Jared Bernstein with us, of course, with the Center on Budget and Policy Priorities. The Bloomberg NJIT STEM Report, always brought to you by New Jersey Institute of Technology, ranked one of the most research-intensive universities in the nation by the Carnegie classification. More at njit.edu/R1. Here's Bob Moon.
Tom, Jonathan, Lisa, good morning. Here's what's making news in science, technology, engineering, and math. Broadcom has warned customers they'll need to place orders for parts at least 6 months ahead of time, a surprisingly long lead time that points to wider than anticipated disruptions to the tech industry's global supply chain. Lockdowns in Malaysia, Thailand, Singapore, and the Philippines are closing or severely restricting business operations, according to a letter to customers this week, seen by Bloomberg News. Broadcom clients were urged to put in their orders at least 26 weeks ahead of delivery, meaning anything ordered now will get shipped right around the crucial holiday season. The typical lead time for deliveries is about 2 to 3 months. The advisory drives home concerns that COVID-19 is disrupting the global tech supply chain well beyond China, potentially affecting everything from Nintendo Switches to iPhones. The Baltimore Police Department is defending its plans to put surveillance aircraft in the sky above the city to help investigate crimes. In a court filing, police lawyers call the test program a remarkable opportunity to create a potential crime-fighting tool. Under the 6-month trial effort, up to 3 planes would scan the city to help track down suspects in homicides and other violent crimes. The grassroots organization and activist groups have sued to stop it, calling the idea a major invasion of privacy. That's the Bloomberg NJIT STEM Report. Tom, Lisa, John.
Bob Moon, thank you, sir. Thank you very much. Let's get you some news, some headlines worldwide. Here's Michael Barr.
John, Lisa, Tom, good morning. A 3-phase plan on how to reopen the U.S. economy was the main topic at last night's White House Coronavirus Task Force news briefing. The guidelines point out that employers must take into consideration the needs of vulnerable members of the workforce. President Trump says it will be a gradual process, and over time, the state's governors will decide if it's okay to let people get back to work. But Los Angeles Mayor Eric Garcetti says his city needs to see a fall in cases and deaths before that can be considered.
Just because the curve is bending, it doesn't mean that we're not adding new cases. And deaths, of course, are a lagging indicator.
Republican Senator John Kennedy is calling for the U.S. economy to gradually reopen. The Louisiana senator spoke on Fox News.
Very, very soon, the can's going to run out of road. We got to open this economy. If we don't, it's going to collapse. And if the U.S. economy collapses, the world economy collapses. And trying to burn down the village to save it is foolish.
Kennedy says we have to open the economy, and when we do, he admits the coronavirus is going to spread faster. Africa could see 300,000 deaths from the coronavirus, even under the best-case scenario, according to a new report that cites modeling from Imperial College London. The report published today by the UN Economic Commission for Africa says that under the worst-case scenario, with no interventions against the virus, Africa could see 3.3 million deaths. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. Thank you very much. Let's get you some price action, shall we? It is a better morning. Good morning to you all. Equity futures are up 76 points on the S&P 500. We advance on the S&P by several percentage points this morning, up by 2.75%. Reasons for optimism? At least we're starting to talk about reopening. I'm not sure what the date will be, but we're starting to talk about the plans, Tom. And then a drug from Gilead, reportedly testing patients or being used on a group of patients in Chicago and seeing, quote, rapid recoveries in fever and respiratory symptoms. To be clear here, a single report, a very small sliver of a overall effort, Tom, but certainly encouraging nevertheless.
Yeah. It moved the market yesterday afternoon, no question about that.
Is that it? Is that your contribution this morning?
No.
Thanks. All right. from New York, this is Bloomberg Radio.
With a Bloomberg Business of Sports report, I'm Michael Barr. The PGA Tour announced it would resume its season in mid-June without spectators. The PGA is aiming for a tournament in Fort Worth, Texas. The coronavirus pandemic halted most events in March. The International Olympic Committee plans to shoulder some of the expected additional costs to delay the Tokyo Games to summer of 2021. IOC member John Coates told reporters via video conference he has confidence in Japanese authorities and the WHO to take the best measures to contain the coronavirus. The commissioners of the nation's major college football conferences held a 30-minute conference call with Vice President Mike Pence and stressed that college sports cannot return from the coronavirus shutdown until campuses have reopened. And that is a Bloomberg Business of Sports report. I'm Michael Barr, brought to you by Grainger, offering supplies and solutions for every industry. Visit Grainger.com.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Global news.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £40 £47 million in prizes so far this year. And it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5 and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. State Street reporting profit that beat analyst estimates. Provisions for loan losses coming in at $36 million in the quarter. Schlumberger reducing its dividend for the first time in more than 40 years as the world's biggest oil services provider sifts through the wreckage of an historic crude market crash. Its shares are higher. They're up 6% this morning. Procter & Gamble up 0.4% after core profit beat analyst estimates, and it reaffirmed its forecast for the year. Futures are higher. S&P futures up about 82 points. Dow futures are up 742 and NASDAQ futures up 177. The DAX in Germany is up 3.9%. 10-year Treasury down 730 seconds, yield 0.64%. The yield on the 2-year 0.21%. NYMEX crude oil is down 7.2% on $1.43 at $18.45 a barrel. And that's a Bloomberg Business Flash. John.
Karen, thank you. Thank you very much. Just over a week ago, we sat here last Thursday wondering what Chairman Powell would be speaking about in around about 2 hours' time. And then a headline dropped across the Bloomberg terminal, Tom, that they'd be buying junk debt. And let me tell you, for the last week, it is still being discussed. The controversy around that decision still being discussed across Wall Street.
And what this comes down to, folks, is the shades of fixed income, from full faith and credit to investment grade to, as John mentions, high yield or junk, maybe is an appropriate phrase. As we talked to Tony Dwyer earlier on the equity markets, to brief you for the weekend on fixed income, George Borey of Wells Fargo. George, thrilled to have you on. What part of the bond market are you focused on when you see such historic Fed action? I mean, where should our listeners look after the actions, the many actions of Chairman Powell?
Thanks a lot, Tom. John, good morning. As you point out, the Fed took some pretty unprecedented moves about a week ago. And they've been, I think, very successful in doing two things. Number one, they've effectively reignited capital markets. And by suggesting that they're going to intervene in the markets and support certain corners of the market, they've allowed the capital markets to reopen. They've allowed companies to issue new debt to be able to fund themselves, to bridge the gap while sort of the economy works its way through the shock from COVID. But also more importantly, they've also reignited interest in fixed income as an asset class. Corporate America borrows a significant amount of money each year. And what you've seen over the last week, and actually over the last few weeks, is material inflows into things like investment-grade credit, as you pointed out. You've seen material inflows into money market funds, which are possibly the safest part of the market to put your money to work in. And then most recently, we have actually seen inflows into high yield or junk bonds. I like to say high yield. It sounds a little bit better. But you've started to see investors kind of re-engage. And I think the other component to this is that investors are realizing, yes, we have a very significant challenge facing us, both a social challenge as well as an economic challenge. But from an investment perspective, the rules have changed a bit here. Yields are very, very low, not just low, very, very low, as we've talked on the show before. And looking forward, investors are going to need to supplement their portfolio with a combination of capital protection and yield. Investment grade debt at, call it 2.75%, with some strong support from the Fed backstopping that market, is relatively attractive.
George, just to jump in,
that's the important part.
At least you can call some of this debt high yield now, because several months ago that was not the case in the junk debt space. You used this word suggest. the Federal Reserve has suggested that it will participate in the high yield space. I'm not clear on actually how they will participate in terms of size. We know what they'd be looking at, high yield ETFs, double B credits, but are you clear on how large their participation will be?
Size, no. I mean, it's unclear as to exactly how significant they're going to be in the high yield market. They've proposed to be willing to buy high yield ETFs and then selectively certain loans that they would be willing to participate in. But the details of these programs are still kind of being worked out. I think the most important thing from the market's perspective is that their willingness to support and to provide some degree of a backstop. And I think what they're effectively doing is they're providing liquidity to what you would consider kind of solvent credits or solvent companies that were functioning just fine before COVID, before the COVID impact hit the markets. And they're trying to provide some degree of a backstop for those companies that are what you would consider moderately leveraged and also sort of solvent before the shock that sort of hit the market. So the market is reading through that and looking for reasons to be hopeful and kind of willing to give the Fed the benefit of the doubt. But they have shown, number one, a willingness to move very quickly. Number two, a willingness to sort of change the rules of the game, so to speak, and really to provide that liquidity backstop to a wide range of an expanding number of companies. Yeah. And so I think there is a little bit of hope there that's beyond just the details of the program.
When you say backstopping a wide range of securities, the question is, where do they draw the line in what they'll backstop? And there's been a lot of controversy over the Fed going even further than what they've currently announced to backstop companies considered zombies, where their interest payments would be more than their income if rates were to rise. How real do you think that is, that the Fed would do that?
I think that's a potential risk, but I think that's pretty far out on the horizon. If interest rates were to rise, that's a big statement at this point. So I think that they're willing to kind of take that risk right now. They have established some rating criteria as it relates to, and if you look at the sequence of their programs, they started a very high quality commercial paper, issues. Then they've moved into the investment grade market, and now they're very much at the top end or at the highest quality component of the high yield market. So most of the companies they're targeting, and I would say are really relatively large cap companies. And what they're trying to do is to get the companies to engage the capital markets to provide an opportunity for them to refinance their debt in the public market. And so the Fed is basically providing a nod of support, if you will, with some money and some implied support that they're willing to help these companies, but they're really sort of nudging them towards the capital markets and trying to force the capital markets open. The one thing I would say is that the Fed's job is to sort of unclog the plumbing, if you will, when the liquidity system gets clogged up, and that's precisely what they've done. They've come in pretty hard, but they've really opened up the channels of financing, and then the economic consequences will sort of sort themselves out as we go through time.
George, always great to get your thoughts on a program. George Bory there. I hope you and yours are doing really, really well. Wells Fargo Securities Head of Fixed Income Research. Just a little bit more encouragement to take a little bit more risk in the last week, Tom Keene, with a big effort from the Fed.
Yeah, no question about it. I mean, it's a huge turnaround. As Tony Dwyer said, I think more than any time in my career, people are absolutely baffled by the last 4 or 5 days of the equity market. John?
Things are better this morning. Equity futures up 3% on the S&P 500. From New York, we're live on Bloomberg Radio.
Imagine. When we're stuck indoors all day, we might find our energy bills creeping up uninvited. The cheeky rascals. And none of us need that right now. But by simply switching your energy with Money Supermarket, you could save £280 on your bills. It's just one small step towards money calm. Money Supermarket.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these and more NBA podcasts right here on TuneIn.
The 2020 NFL Draft is on TuneIn.
Starting Thursday, April 23rd, ESPN Radio has you covered with live coverage, discussions, and analysis of every round.
He hasn't made his last move at the position. He has another.
Be there when the future stars of the NFL find their home.
This kid's a competitor if you're looking at the plus side of him. And when your team selects the players that will shape their future for seasons to come.
Don't miss the biggest event of the offseason, live on TuneIn.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
The Woj Pod with Adrian Wojnarowski.
Doris, you had reason to believe that you needed to get a test for the coronavirus.
Right. Well, let's just start with the headline, which is I did test positive for COVID-19. I was so tired from Saturday the 14th through Tuesday, March 17th. I kid you not, I could not be out of bed for 5 minutes without needing to go back to bed and lay down.
Search the Woj Pod to listen.
With millions of podcasts dropping new episodes all the time, how do you keep up with all of your favorites? TuneIn makes it easy. Simply head to the home screen and find the Your New Episode section to see the latest additions.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 5, cooking something. We all get stuck in a culinary rut with our normal routine. Shake things up in the kitchen by trying an ambitious new recipe or an over-the-top dessert. If cooking really isn't your thing, you can always support your local restaurants by ordering out. For more indoor inspiration, search Listen from Home on TuneIn.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrell, Lisa Abramowitz, and Tom Keene. We are thrilled you're with us on a Friday. It is a beautiful Friday here in New York City into what I'm told will finally be a really warmer and beautiful weekend, and it doesn't matter. With this pandemic, there's been a huge reversal in statistics globally. Just in the last 24 hours, it's only one day of data. And of course, buttressed up against that is politicians all trying to get crushed economies back to work. You see it in all sorts of indicators, including the gaming of Fed assistance and equity markets up. I believe we saw Dow futures near up 800 here moments ago. And also we see it in oil, absolutely crushed on demand worries, with American oil near a 17 handle. I believe we got down to 1806 earlier. John, it makes for an eventful weekend. The politics over to Monday morning will be just extraordinary.
Always a massive spread, Tom, between the hopes about the future and the brutal reality in the present. But that spread has got a little bit wider through the last week. You say the weather doesn't matter. To some degree, I think it does. If it gets warmer, people will be more pushed to start going outside. And I think the shutdown effort in the UK was tested over the last couple of weeks after a nice burst of weather and sunshine actually pushed some people to go outside in a way that the authorities would quite like if they didn't.
Yeah, I looked, Lisa, at the statistics overnight. The slopes of some of the charts from Johns Hopkins University is shown by Bloomberg and the Financial Times and others. And there's selected geographies that are a challenge against politicians' goodwills. California, a lesser worry there, but the slope of California. Lisa, Kansas City on a per capita basis, it's stunning, the illness in Kansas City.
Yeah, the aspect that's so stunning is the numbers that are increasing at an exponential pace are an approximation. They're a wild guess because we don't have rampant testing capabilities. Yeah. And until then, it's very hard to really determine how prevalent the virus is or even the path of its spread. And I think that this is one of the conundrums facing public health officials as well as the economists, which is how do you even know when the green light is up to reopen the economy, Tom?
John, what's your observation on the testing? That's been the constant theme through the week, is the mystery nation to nation of how we affect mass testing.
Not enough. I think the president said earlier this week that we've managed to test north of 3 million people in the United States of America.
1%.
We know the population of America. It's not enough. We need to do more. To really ramp that up and get that to a level where you can reopen the economy in a significant way, where you have the testing, both for the virus and for the antibodies as well, to enable people to take more people back into the office. I'm not sure we're there yet. I think what the president basically did yesterday was say, here's a plan. It's up to the states to decide. It's over to you, the governors.
Yeah, no question about that. Of course, we are thrilled with the support we've gotten from Bloomberg Technical and television and radio, and also from all the people that support us. Bloomberg Surveillance this morning, always, and it's been so true over the years. Brought to you by Cohn Resnick Advisory Assurance Tax. Get breaking tax, legislative, and business insight for financial firms. Cohn Resnick is ready to help. Visit their coronavirus resource center today. CohnResnick.com/COVID-19. Cohn Resnick, CohnReznick. Cohn Resnick. We thank you for your support. Right now, to help us out here with so much of what we see moving forward, to assess equities, to assess bonds, it would be beneficial to speak with Jeff Kleintop, and he joins us here this morning. Jeff, thank you so much for joining us. What are you going to be writing about this weekend? What are you thinking about forward?
You know, my thoughts are that the market has gone from pricing in an economic free fall with no sign of ending to seeing the end in sight and thinking about the timing of a rebound on these reopenings you were talking about. But all that is the easy part. The hard part's ahead. What does the recovery look like? How fast is it? How long does it take? This isn't about a politician declaring it's over. It's about millions of people and hundreds of thousands of businesses deciding they feel safe again. And who knows when that will be. So I think it's tougher going from here for the markets. It'll be weeks before we know how the reopenings are going in Austria, Denmark, Norway, other places that began their reopenings this week. And all we have to gauge reopening so far based on is China's snapback. But that may not be representative or sustainable. So I think we've got to watch the high-frequency data coming out of those countries I mentioned, things like rush hour traffic, overnight shipping, weekend box office receipts, air pollution, these types of things to see are people, whether they, do they believe the data or not, are they coming out of their homes and re-engaging for the first time in months?
So, Jeff, there's many people listening to what you've just said, and they agree with you. And they've stayed defensive, they've stayed disciplined, they remain sensible through this drawdown, and then they've seen the market just get away from them and rip higher. And they want to participate, Jeff. They want to get back in because they're missing out. What do you say to them?
Well, I think getting in or out is never a good decision. I think having a financial plan and sticking to that makes the most sense. Our biggest concern last year was the result of the yield curve inversion, and we felt like that was a good signal that the economy was vulnerable to a shock, didn't know what that shock would be. So we recommended investors who were probably drifting more towards equities to rebalance back towards fixed income. Now I think it's time to take a look at your portfolio. It's probably shifted the other way, and take a look at what is the right mix for you and get back to that mix. This isn't about doing something. This is about timing the market. It's looking at your portfolio and making sure it's aligned towards your long-term goals. I just add that I think that many investors are looking back at the prior leaders. They're looking for leadership again from the tech sector, which has been in place here just lately. But I think when we go through these major shifts in the market, when we go through these major recessions and bear markets, we see new leadership emerge. And so those people who've concentrated their portfolio on the former cycle's leaders may be surprised that we've seen new leadership emerge this time. Now, it's a contrarian call, but I think value stocks could make a comeback here in a way that many investors just aren't considering.
Value stocks have been the widowmaker for a long time. It would be interesting to see if they are the leaders going forward. I want to talk about rebalancing your portfolio. You say going back to your longer term allocations. Do they look different than the classic 60-40 allocation based on some of the big philosophical calls we've heard about the death of bonds from Ray Dalio or inflation, anything like that?
Well, I think 60-40 actually worked pretty well through this downturn. But long term, I think as investors think about income, the income answer is more than just bonds. Bonds have certainly worked well to offset equity volatility in your portfolio, but they haven't produced a lot of yield. So I think if you are in need of income to live on, you need a more holistic income solution that probably does include things like dividend-producing equities. And I know there's a lot of concern about dividends right now, but I think this downturn is probably short enough that the cash hoards that most businesses have will help them to sustain those dividends through it.
If you're just joining us, Jeffrey Kleintop, Charles Schwab with us there, Chief International Investment Strategist. Jeff, you went right to where I need to go. Use of cash has changed, or has it? Are you and Lizanne saying use of cash will continue and we'll continue to see dividend growth and share buyback once we're through this horrific time?
I think that we may see some use of cash go towards CapEx, and many businesses exposed shortcomings in their supply chain. It wasn't a diverse enough supply chain. Maybe their factories were vulnerable because they didn't have enough redundancies in those operations around the world. So there may be some CapEx that results in the use of that cash flow. But I think the dividends, for the most part, are likely to be sustained. Buybacks may instead suffer a little bit here, given the new scrutiny that they have.
Jeff, is there anything that you recommend selling?
I think as investors look at their portfolios, I think the most important thing to consider selling right now is to take a look at, again, where you're overweighting your portfolio, where you may have seen the most gains in recent years. I think it's so easy to have held on to the former leaders and hoping they'll be the first to come back. What we've seen in every one of the last 50 years worth of yield curve inversions and recessions is new leadership has emerged. So I would really consider lightening up portfolios in those growth areas and look to allocating back to these value areas and international parts of the portfolio that may be underrepresented.
Jeff, great to catch up with you this morning. Jeffrey Kleintop there, Charles Schwab, Chief Global Investment Strategist, weighing in on the market at the moment. That's your view on global markets. Let's get you some news, some headlines worldwide, shall we? And check in with Michael Barr. Good morning, Michael.
Good morning, John, Lisa, Tom. The White House's guidelines for reopening the economy leave it to businesses and to the states to secure what's needed to resume normal life. Bloomberg's Martin DeCaro tells us the most important element will be coronavirus testing.
No plan may work unless governments and employers can track the virus's spread with precision. Vice President Pence claims testing is increasing.
It is our expectation that we will have tested more than 5 million Americans before the end of the month of April.
But that 5 million figure sounds less impressive when considering the U.S. labor force weighs in at about 160 million people. Coronavirus tests continue to be rationed, and there's no widely available antibody test yet. That test would identify people who were infected and recovered without experiencing further symptoms. In Washington, Martin DeCaro, Bloomberg Radio.
The toll of COVID-19 on nursing homes is staggering. So far, at least 5,500 Americans were reported to have died in nursing homes or other long-term care facilities from the virus. At least 2 people have come down with COVID-19 at a suburban Baton Rouge church whose pastor refuses to cancel physical on-site services. A 79-year-old usher at Life Tabernacle Church died of acute respiratory distress. Pastor Tony Spell argued, how do you prove that they contracted the virus in this congregation? Spell has been issued citations for 6 different gatherings held at his church in defiance of the state orders. An International Space Station crew, including 2 American astronauts, has landed safely in Kazakhstan after more than 200 days in space. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
They have returned to a very different world. Michael Barr, great to catch up with you, sir, as always. Let's get to the situation on Wall Street, shall we? Morgan Stanley CEO James Gorman catching up with us yesterday, asked about layoffs, and this is what he had to say. No-brainer. Psychologically, I think it would be a disaster, the worst possible thing. And then the news came out over at Cantor Fitzgerald. Wall Street so far, Tom, is being very disciplined about not laying anyone off. The PR around it, absolutely dreadful. For a whole host of reasons, they do not want to do this. Cantor Fitzgerald, though, going the other way. We heard yesterday they've got plans to cut hundreds of jobs across divisions as they seek to shore up the empire.
When the facts change, I change. And, John Maynard Keynes. And you wonder how the major firms, will they be Cantor-like or quietly Cantor-like if this extends beyond, say, the middle of May? I mean, at some point, you have to adjust. And you wonder if Mr. Lutnick's getting out front of maybe where we'll be midsummer.
Next year, Lisa. Let's say they can hold off. 2021, nobody wants to see layoffs. But these guys have got cost-cutting plans. And if they have to be put off this year, what do they do next year?
Yeah, I think it's important, though, to draw a distinction between the J.P. Morgans of the world and the Cantor Fitzgerald, which had, a pretty big exposure to commercial real estate, which was part of commercial mortgages, which was one area that was hit by the layoffs. I will say, also, a firm like Cantor Fitzgerald with a balance sheet, but perhaps not some of the big lending business to offset them, may be more vulnerable.
A conversation for later in the program. The layoffs that nobody wants to see happen anytime soon. Equity futures up by 2.94% on the S&P 500 from New York City this morning. Good morning. This is Bloomberg Surveillance, and we're live on Bloomberg Radio.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that so in 10 years we're actually ready to take on those challenges when we have our first development in the water? NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Influential conversations from...
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
At Lloyds Bank, we're doing everything we can at this time to help you manage your money. One of the most convenient ways to do this is to use internet banking. It's both safe and secure. You can check your balance, view your transactions, and move money between your Lloyds Bank accounts. You can manage and cancel standing orders and direct debits, and you're able to pay people and bills. Internet banking is covered by our fraud guarantee. Lloyds Bank. Now more than ever, we're by your side. For T's and C's, visit our website.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these and more NBA podcasts right here on TuneIn.
Hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Stocks are advancing this morning along with U.S. stock index futures as tentative steps toward restarting the world's largest economy helped investors look past mixed progress on curbing the coronavirus and dismal data from China. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are up 78 points. Dow futures up 729. NASDAQ futures up 162. The DAX in Germany is up 3.7%. 10-year Treasury down 5/30 seconds, yield 0.64%. And the yield on the 2-year, 0.20%. NYMEX crude oil is down 8.1% on $1.61 to $18.26 a barrel. COMEX gold down 1.2% or $20.70 at $17.1120 an ounce. The euro 1.0868 against the dollar. The yen at 107.52. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. Karen's touched on it a few times over the last few hours. One of the reasons this equity market is higher, much higher this morning, is what is happening with Gilead. Gilead up in the pre-market by 12.5%. Shares climbing through yesterday evening after a report that a group of patients being treated in Chicago were, quote, seeing rapid recoveries in fever and respiratory symptoms. I want to bring in Drew Armstrong of the Bloomberg Healthcare team at Bloomberg News. Drew, always great to catch up with you, sir. Tell us and our audience what we need to know about this particular drug and what you're hearing about the success rate in a test taking place in Chicago.
So Gilead's drug is called remdesivir, and this is a drug that's actually been around for quite a while. It is a antiviral medication, which means it is used hopefully to stop the replication of the virus, which slows down its infection of the body. And it was actually looked at most recently in a big way as a treatment for Ebola and was unsuccessful for that. But now it's been repurposed as a potential treatment for the virus that causes COVID-19, the new coronavirus. The technical name for it is SARS-CoV-2. And it has shown some early promising results, and I think we got a snippet of those early promising results from a report from a competitor yesterday. But, I think it is important to remember that they are early, they are incomplete, and there's some unique features of this virus and the way it behaves in people in particular that make having a randomized trial with a placebo arm really, really, really important.
Just to put some numbers on this, so it's a University of Chicago study that enrolled 125 patients, most of whom had the disease in a severe way, and it did improve their symptoms substantially, but there was no control group, and this is a small sliver. I'm just wondering, Drew, from a medical perspective, how much of the reaction has been more hope than reality based on these numbers?
I think there's a tremendous amount of hope, and I actually want to return to a little bit of language you used just to put some of the right context on this. One of the things that's important to remember with this virus is that 99% of patients who get this get better on their own. Our immune system is the most powerful mechanism that we have to fight this thing and just about every other virus. So the reason you need to have a placebo-controlled trial is that when you have 99% of your patients, getting any form of, any severity of the disease getting better, you need to be able to say, okay, was it that the patient got better on their own because they were getting very, very good medical care at a place like the University of Chicago, which does excellent work, or is it because the drug helped? And so what you're looking for is, in the right group of patients, an improvement over how a large enough body of these folks would perform otherwise. And so, when we say the drug, helps them without a placebo arm, it's really impossible to know that. We can look at the experience of other patients who've had this disease, and hopefully extrapolate something for that. But remember, at the same time that these folks are getting care, the very good doctors at some of the very best medical institutions in the world are attempting to save their lives, while they're doing this. So, and we are learning about this not just from a drug perspective, we're learning about it from a clinical perspective. Yeah. It is a tricky environment in which to do clinical trials, which makes getting them right all the more important.
Folks, you can hear how competent there Drew Armstrong is about this. Drew, I'm going to ask you the same question I asked a fancy PhD 2 days ago. Here you go. The timeline that we all have is a timeline of amateur. We don't have a clue. 7 days out, 14 days out. What's your moving average? What's the data stream you need to see to start seeing information and belief? Is it 7 days? Is it 14 days of information? Do you need to go out 90 days? What is it, Drew?
Tom, just so I'm clear, are you talking about in terms of how long we give this drug to work in a patient, or how long?
I don't mean the drug, but I mean the pandemic. The pandemic in general. Do you, as a real pro in this, do you frame out to mid-May, or are you really looking out to July? What is it?
Yeah, so I look at it in a lot of different ways. I look at it, if you think about this as a virus that has about a 4 or 5 day incubation period, and then perhaps a 2-week course of illness, you're looking at almost 3 weeks. And one of the in terms of just one cycle of illness, and people can infect others in just about any phase of that. It appears with some limits on either end from what we know now. One of the very good things about social distancing that's going on now is it slows down those transmissions, but you also need to then the reason these periods of social distancing have lasted for weeks is because, it may take 5 days for somebody to incubate the virus and become more contagious and then infect somebody else in their household. And so you can be talking about a long period of time before all the what was once all of us interacting and creating lots and lots of room for transmission, and has now gone into a much smaller groups of people with much less room for transmission. It can still take time to play through those smaller groups and for us to get a good idea of have those measures actually stopped the potential or significantly slowed the potential for broader transmission. Yeah. And so if you look at this from a purely epidemiological standpoint, those are things that get measured in weeks, not in days. Now, there are obviously other considerations that are being weighed, economic, and, you're talking about putting those timelines of transmission up against our hopefully improving ability to test for the virus, to track potential cases, to isolate those cases, to treat sick people. every single one of those things is all playing on the reaction in this at once. And so it becomes a very, very, very complicated balancing act in terms of how we look at this with all of those factors in play.
Drew, appreciate the clarity coming from you this morning. Thanks for dropping by and joining us. Drew Armstrong there. Hope the family's doing well. Joining us from the Bloomberg Healthcare team. Curious to see the stock up so much this morning. Right at the bottom end of priorities, granted. But I imagine if you have any success with any particular drug at any particular firm, there's going to be huge pressure not to make any money on it, Tom.
Yeah, I'm glad you bring it up. This goes back to the wonder cancer drugs that cost $70,000 a year. You really wonder how it prices out. But I thought that was great, John, to talk to Drew there. And I believe his window is 3 weeks, which is wow.
Some much needed clarity, given that this is a market that's rallied quite a bit off the back of this story. Equity futures up by 2.83% on the S&P 500. We're up 79 on the S&P from New York this morning. You are listening to Bloomberg Surveillance live on Bloomberg Radio.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
This is a Bloomberg. Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year. And it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
At Asda, we're doing all that we can to keep shelves full and prices low. So you can pick up a 7-pack of Growers Selection bananas or 400 grams of seedless red grapes, both just £1 each. Asda. Save money, live better. Selected stores subject to availability.
TuneIn makes it easy to be a part of the conversation. Just make sure push notifications are enabled to hear about breaking news and trending topics from around the sports world. You'll also get custom recommendations of podcasts and radio stations covering the sports and teams you care about.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio. Your Friday morning price action shaping up as follows. 1 hour away from the opening bell. Equity futures still elevated. Off session highs, though, up 73 points on the S&P, positive 2.63%. In the bond market, quite muted price action. Yields up just a single basis point to 0.63% on a 10-year. The price action to watch today is just in the commodity market. A remarkable move again on crude. Lower, down 8% on WTI, whilst Brent is positive 0.75%. WTI crude right now, $18.29. Guys, it's been 24 hours to the second, to the minute, that we sat down here and talked about another huge surge in jobless claims in America. 22 million in just 4 weeks, Tom. It has been brutal.
Brutal, and it comes out, Michelle Meyer helping us with that yesterday. Thank you, Michelle. And it comes out to 14% of the workforce, and that'll move forward and move higher here in the coming weeks. There's no question about that. Louis Alexander is a most interesting economist. He has the rigor of Stanford and Yale behind him, and is now at Nomura, where he is chief U.S. economist, and we can drive forward this conversation on the American labor economy. But far more, Louis Alexander brings an insightful prism on the effect of technology upon all that we have wrought, not only over the decades, but also through this pandemic as well. He joins us right now. Lou, I've been dying. When I knew you were going to come on, I just was so thrilled. And I go back to your really historic essay of a decade ago where you simply said, look, there's winners and losers in all this. Who's going to be the winners and losers out of this horrific pandemic?
Look, I think it's probably going to extend some of the trends that were underway already. So if you just think about what's going on in brick and mortar retail versus online, I think we're likely to change behavior because of what we've gone through. Similarly, I think the fact that we're going to find out who can really work from home and who can't. There's been a lot of assumption about what has to happen in terms of the way work is organized and whatnot, and obviously we're having a kind of a real-time experiment in all of that. I suspect it's going to exacerbate trends that have been underway for a long time. So in some sense, the knowledge workers and whatnot that can take advantage of the IT that we have, their strengths will probably be reinforced with this. And unfortunately, the people that are more dependent upon social contact are probably going to do less well. But look, we're all finding out how important, things like that social contact is. I think we're all missing going out to restaurants. I think we're all missing, doing things that with big groups of other people, and I think that'll persist too.
That's actually where I wanted to go. Do people miss going out to restaurants? Because I've read a number of reports saying, I do, and I know that Tom does, and I know that John does, but I'm wondering whether people are going to go back in the same level that they have in the past, based on the fact that we've seen people just completely change their habits and cook more at home and change their entire lifestyle.
So I think it's going to be a slow recovery. Look, I think the initial issue is when the policymakers decide that they can open up, every individual is going to have to make a judgment about their own willingness to run the risk in an environment where the disease is still going to be a threat. And so I think there's going to be a behavioral lag just from that. I think if you think about where we're likely to be 2 or 3 years from now when we're kind of completely on the other side of this, look, my guess is that people will continue, we'll go back to restaurants as they have. My guess is it'll be a different set of restaurants. Obviously, I think there'll be, unfortunately, a lot of them that are not going to survive. But my guess is on that one is that we will come back ultimately. But that will only really fully happen once we either have a vaccine or we're all immune or whatever it takes so the virus is no longer a threat.
So, Louis, we were speaking earlier, John mentioned the horrific numbers we've been getting with respect to jobless claims, and that 14% of the American workforce has lost its job in the past 4 weeks, wiping out a decade of job gains. Some people saying the unemployment rate after we do get the economy restarted is going to hover more around 10% for a prolonged period of time. Do you agree? Is that the new normal in the United States?
Look, it's going to take a long time to come back from this. I do think this is different from the global financial crisis in the sense that once you put the disease behind us, however long that takes, I don't think there's a reason why you shouldn't expect the economy to get back to some notion of full employment, which is probably closer to 5% than 10%. And so, unlike the decade after the global financial crisis when we were dealing with big reduction in the supply of credit, big changes in the financial sector that were sort of a permanent drag on things beyond the immediate, I think this one is not like that. And so I am more optimistic over the medium term. The problem is this is such a big shock, and it's going to take a long time for us to get back.
Louis Alexander with us with Nomura. We're thrilled he's with us, the chief U.S. economist. It barely describes his commitment and his work over the years to the U.S. economy. Lou, on Thursdays, I'm getting out the Friday doom and gloom charts of the Fed's balance sheet. It's up $6 trillion whenever it's up, and everybody's doing the math of how much they've imputed into the system over the last couple weeks here as well. Is the balance sheet growth of the Fed, is it just a smooth curve that can go on forever, or is there a point actually where they have to say we can't go further?
Look, I don't think they're facing any real constraints. I think they're going to do what they feel they need to do. Look, I think the way to think about what's happened over the last few weeks is there's been a big deleveraging within the financial system, and they have taken assets on that levered investors no longer want to hold, and that's been very important to managing this in the near term. But that's not a long-run thing. That's something that's an immediate reaction. So I think the pace of increase in the balance sheet is going to slow.
So Lou Alexander, we're going to leave it there. Lou, great to catch up with you, Nomura chief U.S. economist. Look, on the constraints of the balance sheet, it's a question I'm going to ask to the Cleveland Fed president a little bit later, guys, Loretta Mester, when she joins us on Bloomberg TV and on Bloomberg Radio. Lisa, I have no idea if there is a limit to any of this. Can they go to 8 trillion, 9, 10, 11? Where's it stop?
I think a lot of people expect them to go to $10 trillion. I mean, if you take a look, the Fed's balance sheet has increased by $2 trillion in the past month. In that 4 weeks, and it continues to increase with nearly $300 billion added in the week ended yesterday. And there is a question, at what pace can they continue to add? There's a little bit of a slowdown, yet it does seem like they are on pace to go to 10, 11, maybe even 12 trillion. We've heard that prediction here on this show.
And John, what's great about this and having President Mester on today is her core effort is mathematics. And so she's particularly attuned to these reaction functions. And, the phrase that's used, quietly is glide paths. What's the glide path for the Fed in so many ways? I mean, the glide path on interest rates is, I guess they can't cut any lower, but the glide path on the balance sheet, as we talked to Dr. Alexander about there, is a really tangible question because we're not Japan. I mean, we are the full faith and credit.
Well, some people might say we're increasingly becoming Japan. And one thing that the Bank of Japan does do that the Federal Reserve is not doing is buying equity ETFs. Now, the Swiss National Bank also buys stocks as well. It's the one thing really that's left for the Federal Reserve to consider. And I imagine there's some people listening to this right now screaming at the radio, at the Bloomberg terminal saying,
they do that all the time.
No. But come on, I mean, 2 weeks ago, it was controversial, just the idea of them buying junk debt. Now that's become a reality.
I got to say it, John, it's my buy signal. If the Fed starts buying equities,
you're in.
I'm coming out of a triple leveraged all cash fund.
And he's going outside. I mean, honestly, there is a question, though, because right now the Fed is focused on trying to get the credit restarted to companies. That is a big difference than buying equities for the sake of propping up market valuations. And I think that, perhaps people aren't drawing that distinction necessarily when they criticize the Fed. But when you talk to the Fed officials, as you will be doing, John, that seems to be the way that they're trying
trying to frame this.
Yeah, we're also going to try and get away from Wall Street just for a moment. Michael McKee, I know, is keen to ask some questions on her district. Important to realize for listeners outside of the United States who might not be familiar with the Federal Reserve System, she is the Cleveland Fed president. So this is the 4th Federal Reserve District, and it comprises Ohio, Western Pennsylvania, Eastern Kentucky, and the Northern Panhandle of West Virginia. And we'll be asking those questions, Tom, about how her district is doing and how companies are responding and what they would need to see to reopen and normalize.
I mean, John, I got to ask the same question Michael Barr would ask of you as well. Have you enjoyed being on Route 90, Interstate 90, and taking hard left turn?
I've never done that, Tom.
You've never done the hard left turn in Cleveland at Case Western University? You're going down a 4-lane highway, and all of a sudden it turns 90 degrees left.
It sounds like you've either done it or gone on Google Maps and lived
Oh no, I've done it. I have done it.
I never know with you.
Far too many times.
Let's get some news, some headlines worldwide with Michael Barr. Good morning, Michael.
Good morning, John, Lisa, Tom. At least 5,500 people in the U.S. were reported to have died in nursing homes or other long-term care facilities from the coronavirus. Global health and vaccine specialist Dr. Peter Hotez says he tried raising the issue about a month ago after it became apparent that nursing home facilities were not getting the attention they needed.
There didn't seem to be that sense of urgency, even after what happened in Kirkland, Washington, where ultimately 60 residents died, up to 60. And sadly, this has not been the first horrific incidents. We've had 4 or 5 now incidents in nursing homes where multiple deaths. So in Richmond, Virginia, there was 46 deaths, in New Jersey, and a couple of other places.
A leading public health expert said today that system errors have led to Britain having likely the highest coronavirus death rate in Europe. Anthony Costello, director of the Institute for Global Health at University College London, said the UK could see 40,000 deaths by the time the first wave of the country's outbreak is over. Costello criticized the government for failing to test enough people for COVID-19. So far, more than 13,700 people have died in the UK hospitals after testing positive for coronavirus. Presumptive Democratic presidential nominee Joe Biden told donors at the trio of high-profile endorsements he got this week from former President Obama, Elizabeth Warren, and Bernie Sanders triggered a surge in fundraising. Biden said his campaign raised $5.25 million so far this week. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. Thank you very much. The news and headlines worldwide with Michael Barr from New York City. Here's your price action. Around about 48 minutes away from the opening bell in New York. Equity futures up by 2.6% on the S&P 500. Guys, I don't think we've had a back-to-back weekly gain since the drawdown started at the back end of February. The first 2-week gain we're poised for on the S&P 500 since the middle of February.
24,112 on Dow futures, John. That's inside a bear market, whether it's 18 or 20%. You know, we've come back up through from the peak that we were at a bear market level. I mean, just pointing that out as one benchmark.
Interested to see what's lagged and what's led, though, Lisa. Yesterday, a pretty clear split in the leadership. IT healthcare, okay, doing good. If you're looking at energy and the financials, it has been a rough week for the banks off the back of these earnings.
Yeah, and I'm also watching small and mid-sized companies, small caps, the Russell 2000, steep underperformance, showing some real weakness in some of the more vulnerable countries.
John, very quickly here. West Texas Intermediate, $17.96.
Wow. WTI, the front month contract in the futures market right now, down by 9.6%. Unreal, $17.96. Sub 18 on crude. More to come from New York. This is Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. We shouldn't be too surprised that housing starts plunged in March.
The permit process, I heard some permits were even quarantined for days at a time.
Cheryl Palmer, CEO at homebuilder Taylor Morrison, says the current environment is challenging.
Builders were either closed or, like us, by appointment only. Stay-home orders, differed across the U.S. And it was very disruptive as people were trying to find that, how to operate in that new normal.
But Palmer also says buyers are still interested in home buying and determined to do it virtually.
We are seeing a tremendous amount of activity with those consumers, from when I look at our online tours to our design center selections. Our first week of virtual tours, we registered more than 300 appointments.
And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Connecting decision makers to a network of...
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration, search Listen from Home on TuneIn.
Did you know with TuneIn's local radio feature, you can stream live FM and AM stations in smooth streaming quality and discover local news, talk, and music stations you didn't even know existed. Navigate to the local radio section under Browse to listen locally on TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
We know you don't have other plans tomorrow. That is, unless you already marked your calendar for One World, Together at Home, a night of music and action in response to the COVID-19 crisis. Turn on TuneIn beginning at 2 p.m. Eastern, 11 a.m. Pacific to hear live performances by Alanis Morissette, Elton John, Billie Eilish, Paul McCartney, Eddie Vedder, John Legend, Casey Musgraves, Keith Urban, Chris Martin, Billy Joe Armstrong, J Balvin, Lady Gaga, Lizzo, Maluma, Stevie Wonder, and more. Search Together at Home on TuneIn to join the live stream tomorrow at 2 p.m. Eastern, 11 a.m. Pacific.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are moving higher along with stocks in Europe and Asia. This is tentative steps toward restarting the world's largest economy helped investors look past mixed progress on curbing the coronavirus and dismal data from China. Investors are assessing both President Trump's guidelines to reopen the economy as well as a report that Gilead Sciences, which is up 11% in the pre-market, saw improvements in virus sufferers taking its drug. We check the markets every 15 minutes throughout the trading day on Bloomberg. Right now, S&P futures are up 70 points. Dow futures up 682. NASDAQ futures up 148. The DAX in Germany is up 3.5%. The 10-year Treasury up 2/32, yield 0.61%, and the yield on the 2-year is at 0.19%. NYMEX crude oil down 10%, down $1.99 at $17.89 a barrel. COMEX gold is down 0.8% or $13.70 at $17.1810 an ounce. The euro 1.0866 against the dollar. That's a Bloomberg Business Flash. Tom and Lisa.
Best-in-class data checks from Karen Moscow. That statistic on West Texas Intermediate American oil. Extraordinary, folks, plunging below $18 a barrel. This is without question our definitive discussion this week on the microbiology and the virology of this pandemic. Andrew Pellish is out of Rutgers in Penn. He is at the Johns Hopkins University Bloomberg School of Public Health. I should point out that Mr. Bloomberg has provided philanthropy to his Johns Hopkins University and, of course, is the founder of Bloomberg LP and this television and radio station. This is an extraordinary expert on microbiology and virology. Let's listen to Professor Pelkos.
This virus is truly interesting in the sense that it causes this broad spectrum of diseases. So it's very true that the vast majority of people will suffer what we call sort of mild to moderate diseases, maybe even no symptoms at all. But when you look at the vulnerable portions of the population, the elderly, when you look at people with secondary medical conditions such as diabetes, heart disease, other lung disease, and to be honest, even when you look at relatively healthy individuals, there are a significant number of part of the population that has very severe disease requiring, if not a hospital visit, admission into the hospital. So it runs in a huge spectrum in terms of how it presents after infection.
I don't want to talk enzymes on a Friday, and I certainly don't want to talk RNA transcriptase and the other necessities of doing a test. But I would suggest respectfully, Doctor, that America, from the top down, doesn't understand the sophisticated chemistry and biochemistry of tests. How hard is it to do a test and millions of tests for this virus?
So we know a lot about the virus, and you certainly can do good testing. It requires not only a good test, but it also requires a good laboratory that's validated, that knows how to do testing, that knows how to do the controls, and knows how to show that they can reproducibly perform the tests well. So that's where it's really important to be focused in on public health agencies and medical institutions that know how to do these tests.
Professor Pelkos, talk to us about reinfection and immunity. Are people that have had the virus really getting infected twice?
Yeah, so right now it's still a little bit unclear, but this gets back to the testing issue. Oftentimes, what I've seen is people who are testing positive by the test that tells you if you're infected, which is a PCR test that detects the virus. That doesn't necessarily mean you've been reinfected. It may simply mean that there's small amounts of the virus that are still in your system from the infection that you've already controlled a few days ago or a week or so ago. So right now, there really is no good evidence to suggest that you're getting reinfected after your first exposure. It may simply be that the virus is hanging around and you see vestiges of the virus there after you've controlled the initial infection. But it's something that's very important to understand as we think about rolling back and coming, relieving some of our public health interventions.
Do we have a credible test to test immunity?
There's going to be a two-part phase to that. Many of the tests that are out there will tell you if you've had an infection and if you have antibodies. Now, that's important because that'll tell us how many people were infected the first time this virus moves through the population. But most of those tests don't really tell you if you're protected from reinfection. That's going to take a second set of tests that are done more in laboratory settings that take a little bit of time to develop, but that'll differentiate people who just have some antibodies to it versus the people that have antibodies that we think will protect you from reinfection. We'd like to think that those are going to be very closely related, but we have to do those experiments to be 100% sure that the rapid tests that people are establishing are really telling you that you're protected from infection or reinfection.
Help me with reject the true or accept the false of this testing. How at risk is America to type 1 and type 2 malfunction in our testing?
Yeah, so again, this gets back to the laboratories that are doing the testing and making sure that the tests are being performed in rigorous controlled environments. You can have two types of errors, right? You can have a false positive, meaning that you test positive when you really aren't infected. And the other type of error is that you test negative when you really are infected. And it's that latter group that's really the most important to be aware of, because that really means that you're telling people who are infected that they can go back out in the population and behave, and not take extra precautions. And again, laboratories that know how to perform these tests do something called validation, right? So they go through and they test with known samples both types of error and report back what exactly they expect those errors to be. Other laboratories that are just sort of fly by night may not be reporting that rigorously, and that's where some of the danger comes in.
Andrew Pecos with Francine Lacroix and myself. He's with Johns Hopkins University Bloomberg School of Public Health. Lisa, there's been a shift in the markets. We've been a very much up market. It's a less up market now. I've been searching with our team on the headlines. I guess I've got to go to John Williams over in CNBC talking about extending the slowdown out to the end of the year. Futures were up 750, 770. They're now up 682 Dow futures. That is, so the equity's still up 2.9%, but it's less. But Lisa, where I really see it is in the 2-year yield with a vengeance came in to 0.1979 as well. And oil just absolutely crazy. Look at oil, Lisa, 17.86 a barrel. That's a 10% move.
Look, this is the conundrum underpinning the market right now. You're not seeing coherence in all of the market moves. You're seeing bond yields continue to trend lower, even as equities try to push higher. And you're seeing oil prices with no bottom at this point. And that's a real question. How can equities rally with no conviction stemming from the oil markets and when demand will pick back up, Tom?
Well, we'll have to see. Euro Swissy, of course, is one place I go, and that shows a little bit of a safe haven feel as well. I guess mostly you see it in the bond market, the shift we're seeing to lower yields. Please stay with us another hour of Bloomberg Surveillance. Good morning.
Why is coming soon? Ricochet, the new action film written by, directed, and starring Euro Millions winner Timothy Barker, with music by Timothy Barker.
Tonight's Euro Millions jackpot is a massive £58 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Play online or on the app. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is a message from the government. Coronavirus is a national emergency. Life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
Be part of the sports conversation with Sports Talk Radio on TuneIn. Join the discussion around your favorite local teams with sports stations broadcasting in your area.
The game will be 185 to 183 and somebody wins, whatever. Football, it's either full go or it's not. You got like, oh, it's thud. I can practice what they call
Follow
thud.
national storylines and debates with ESPN Radio.
Does the NBA have a hiring problem when it comes to front office jobs in the leagues and a minority hiring issue? Stephen A. chimed in on that today on First Take.
It also resonates with me, Max. You can
appreciate this position. One of the candidates was Brian Colangelo. We know what happened. I like Brian, but we know.
And hear what's happening worldwide with international channels like Talk Sport.
Seems as I'm sort of doing my life in reverse at the moment. I was on cricket tours when I was 20 years old, and now I'm 31. I'm out sat at home, injured playing PlayStation. So it's a tournament basically where you create your own character.
In your backyard and around the globe. Keep your finger on the pulse of the sports world with TuneIn.
Losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. I mean, let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene. Thank you for joining us coast to coast, Sirius XM channel 119, and of course on all of our digital platforms. We greatly appreciate many of you tuning in from home. We are just stunned at the response we've gotten, and we know so many of you are working at Bloomberg terminals and your other efforts at home, and of course tuning in and keeping abreast of the conversations. Huge hour ahead, including Loretta Mester will be with John Farrell and Michael McKee. This is hugely timely. What's so important here, Paul Sweeney, is President Mester comes after President Williams. I know President Williams over at CNBC now, and he moved the markets. He moved yields lower, a 2-year well under 0.20%, and oil took another new leg down, 20 to 19 to 18. And Paul, West Texas Intermediate with a 17 handle right now.
Just extraordinary, Tom, and I think Mr. Williams is kind of tempering the economic outlook for the remainder of 2020 a little bit on the margin.
Exactly.
And that caused the markets to pull back a little bit here, but we certainly have green on the screen here, I think, as the markets are trying to discount how and when a lot of the U.S. economy may emerge from this lockdown over the next several months. We got a little bit of color from President Trump yesterday, essentially putting responsibilities back to the governors.
Gold down $18, $17.13 an ounce. It was below $1,700 briefly. West Texas, $17.68. Brent crude, $10 above $27.96. With us now on the equity markets, David Wilson.
Tom, the most active stock in early trading is Gilead Sciences. The shares are up 10%. The medical news site Stat reported that a group of COVID-19 patients had, quote, rapid recoveries in fever and respiratory symptoms, end quote, after taking the company's drug remdesivir. The story cited a video from a University of Chicago researcher who's helping with a trial of the medicine. And then you have Boeing up 11%. The plane maker unveiled plans to restart commercial jet production in the Seattle area next week. The work had been shut down since March 25th because of the coronavirus. The company will also resume preparations for reviving the 737 MAX jet. And you've got a whole lot more stocks that are up, but what's really telling is the shares that are down in early trading. A whole bunch of companies that have been seen benefiting as consumers stay at home. What are we talking about? Amazon.com down 1.5%. Walmart's down 1%. Netflix down 2%. Roku, streaming video like Netflix, down 3%. Zoom video for video conferences online, down 3%. And Slack Technologies, all about communicating, down 4.5% in early trading. Then you turn to the banks. They've really taken off after having fallen earlier in the week in response to the first quarter results. It's all about, getting the economy going again, as President Donald Trump's talking about with his plan unveiled yesterday. Bank of America's up 5.5%. Citigroup up 6.5%. JP Morgan Chase and Wells Fargo both up 6%. And you have State Street up 8%. The trust bank's earnings and revenue for the first quarter were far above analyst average estimates in the Bloomberg survey. Now, those results were in keeping with the figures yesterday from one of State Street's rivals, Bank of New York Mellon. So that area of banking doing just fine, thank you. Energy stocks are higher after Saudi Arabia and Russia indicated they may be willing to reduce oil production further. Of course, it was just last weekend that OPEC and Russia and other producers agreed to a cut of 9.7 million barrels a day. You got ExxonMobil up 2%, Chevron up 2.5%, Occidental Petroleum also up 2.5%, and Schlumberger is up 4% after cutting its dividend by 75%. And that's the first reduction in decades from the oil services company. First quarter revenue trail estimates, and Schlumberger took an $8.5 billion pre-tax charge in the period. Yeah. Ford Motors up 5.5%, even after reporting a preliminary net loss of about $2 billion for the first quarter. You look at the airlines, they're bouncing back from losses yesterday after United said demand for flying is, quote, essentially zero. United shares up 7%. So are American shares. Delta and Southwest both higher by 5.5%. You look at the cruise lines. They're up even after Royal Caribbean extended a global suspension of voyages by a month through June 11th. Royal Caribbean's up 9.5%. Norwegian's also up 9.5%. And Carnival is up 7.5%. You've got Las Vegas Sands up 5.5%. Sheldon Adelson's casino company said it will move forward with investments in Singapore and the Chinese city of Macau. People familiar with the matter said he's looking at acquisitions as well. Las Vegas Sands suspended its dividend. And I got one more for you. I'm going to end where we began, talking about COVID-19 treatments. In this case, it's Moderna, up 18.5%. The U.S. government agreed to provide as much as $483 million in funding for the biotechnology company to develop and test a COVID-19 vaccine.
David Wilson, thank you so much. What we're going to do here, folks, is get to Margaret Brennan in a moment. Paul, we've got to pause and look at the oil market, and then Loretta Mester will join from the Cleveland Fed with John Farrow and Michael McKee. I'm going to just simply say it, and I think, Margaret Brennan, I know listening to us talk, Paul, I've never seen this. This is a free fall in oil. This is American oil, folks. This is discrete action away from global Brent crude. And it speaks, Paul, to the coming crisis across energy America, from the Dakotas on down through the Permian Basin. $17.57 on oil. It is a bid free fall over the last hour. Maybe this is off John Williams' comments. I really don't know, Paul. Extraordinary, 11.6% down just today.
Yeah, Tom, this is going to wreak havoc throughout the U.S. oil patch for sure. And I think the concern there is, Tom, is, we're really coming up to capacity. Like, where do you store this stuff? And, people are talking about a month or 2 months, and then you can be at max storage. You can't put it anywhere else. And then that marks single-digit territory, according to certain strategists.
Just because of time, we'll get to this in a bit here, because Paul Sweeney has a great link into all of our energy people, including Vince Piazza. Right now, with us is Margaret Brennan, who has driven the conversation on Sunday morning. Face the Nation has had extraordinary national interest on the CBS television network, and we are thrilled to have it on Bloomberg Radio. Hugely popular Sunday afternoons at 2 p.m. Margaret, congratulations on your effort, and I saw you took it on the CBS front lines of the press conference with the president a few days ago. Is everyone surviving at CBS in the battle with the president over the messaging forward this week?
Well, absolutely. People are sort of just determined to try to get facts and information out there to the public right now, because as we're seeing, there's just a real hunger for straight answers, and to try to take the politics out of some of this, since it is literally life and death. I thought it was interesting yesterday at the press conference, the president's tone was, he was a bit, he demurred. He pulled back from his claim that he has the ultimate authority to decide when the economy reopens, instead saying, this is a rolling reentry. It's going to be up to the governors to make the call. We've seen a real change. Yeah. And I think some of that may come from, as the president likes to talk about his personal experience, he's seen death of friends. So he keeps wavering between we've got to charge ahead, full speed ahead, and wow, this is really dangerous and complicated, and it's going to be up to the governors to figure out.
So, Margaret, is there a sense in Washington that this has kind of gotten away somewhat from this administration, that perhaps they don't have the proper people in place to really advise the president in a consistent way, and therefore maybe what we're seeing is, again, more deference to the states?
Well, I think it was a realization from the task force advisors that this is just how our democracy works with these federalized states. But some of it is also just a recognition that it's about technology and access to testing, creation of surveillance and contact tracing that is going to be at the heart of any response to a reopening. Governor Baker of Massachusetts is joining us Sunday to talk about what he's doing in Massachusetts, but acknowledging that this is not just about one state. Yes, states have borders, but as you well know, in the Northeast, these are corridors. People pass back and forth. There have to be regional responses. And the federal government hasn't been able to allocate and obtain the amount of technology needed to make every single state have the equipment it needs to roll this out at the same time.
Margaret, I want you to tell us about Face the Nation as you're trying to develop your wonderful lineup here on a Friday. And I want to do it within a developing story from the New York Times of Mr. Meadows just stunned at what he's walked into at the White House. I want to be careful here, Margaret. It's clearly a sensitive and developing story of Mark Meadows greeting the Trump administration. How germane is that to the chaos that many perceive within this executive effort?
Well, Mark Meadows has been an important confidant and ally in Congress to the president, but now the chief of staff role is supposed to be, really about prioritizing and triage. And now he's in the middle of the greatest crisis this country has seen in a generation. And so prioritizing that and getting all the task force to function properly is going to be a real challenge.
So, Margaret, here on Bloomberg Radio, we cover, many of the press conferences, the daily press conferences from the various governors, even mayors, including Washington, D.C., as we try to get a sense of kind of how each individual state is dealing with this. Is there a sense that there should be a greater role for the federal government driving this, or is it just the states all going all up for themselves?
Scott Gottlieb, the former FDA commissioner, has been a frequent guest on Face the Nation, and as he described it, the federal government is pretty much tapped out. This is going to be up to the executives in the states to come up with these regional strategies, and that's what we're already seeing. That's what Baker's doing with the surrounding New England and Northeast governors. And this is kind of amazing to also comprehend. It's going to be up to many of these employers to figure out how do you get the equipment to your employees that you need, particularly when supplies are so hard to come by. Because a company has to be able to feel it can be legally okay with welcoming you back to a crowded workspace. And it's all really about technology and access to it.
Margaret Brennan, thank you so much. Congratulations on Face the Nation. Important discussions this weekend, including Governor Baker of Massachusetts. Margaret Brennan and Face the Nation. See it on the CBS television networks. Hear it on Bloomberg Radio, 2 p.m. on Sunday afternoon as well. Paul, as we go to this important conversation with the president of the Cleveland Fed, oil is simply stunning.
Yeah, it really is, Tom, and it's just it's in this free fall here, and I think just simply reflecting that we've got no sense of when demand will come back, and at the same time, you've got a supply issue with Saudi Arabia and Russia. Not good.
Well, and the dynamic as well. I want to make clear, folks, it's decidedly a dynamic of American oil. American oil is plunging 2019, 18, and now the 17 handle, where Brent crude has been far more stable, $10 above in the 27 level. This is not about geopolitics and much more about this demand and storage crisis that we see across broader middle North America as well. Paul Sweeney and Tom Keene with you here, and part of what we've been doing is a great sequence of Fed conversations with Clarida and with others. And right now, Michael McKee and John Farrow in conversation with the gentle lady from Cleveland. Here is John Farrow.
For our audience worldwide on Bloomberg TV and on Bloomberg Radio, I'm very pleased to say that we're joined now by the president of the Cleveland Bank of the Federal Reserve, alongside Bloomberg's Michael McKee, who will join us for this interview. The Cleveland Fed president joins us now. Loretta Mester, fantastic to catch up with you. I just want to reflect on the data that we've had for this economy, because it has been brutal. 22 million jobless claims in a single month, wiping out a decade of jobs growth. I want you to help us understand how you see the future path for policy together with this recovery as these economies slowly normalize at the back end of this year.
Yeah, so you're right. The data is very ugly, not unexpected given what we've decided as a country to do in the best interest of public health, which is, of course, social distancing and shutting down. And the medical experts tell us that's the best way to control the virus. So what you've seen is all the numbers coming in basically reflect that shutdown in activity, the fact that many firms are furloughing workers. You see that in the initial claims numbers. You see workers being laid off. This is very, very painful for everyone. Not only do you have to deal with illness and sickness, but then you also have to worry about your financial well-being. So, you know, small businesses throughout our district, in the 4th District, the Midwest, are telling us, you know, this is an incredibly unprecedented event for them. So I'm not that surprised about the actual numbers per se, because we engineered this shutdown. The question is, going forward, can we put in policies, and I think the Fed and the federal government have been trying to do this, to get people from the economy that looked good in February through this pandemic shutdown period, so that when the economy begins to open up again, they have the wherewithal to sort of have the recovery come on board. And so a lot of the things that the Fed is doing is to try to make sure that there's a good foundation in terms of functioning markets, which of course is vital for an economy to get, you know, credit and lending to the households and businesses that need it, to reduce collateral damage and mitigate some of the impacts from the shutdown, so that when we get to the point where the economy reopens, the recovery is in the best possible place it can be given this unprecedented shutdown in activity.
Loretta, this is Michael. When you talk about when we're going to open up, what are CEOs in your district, and you're in the heart of manufacturing country in the U.S., what are they telling you about the damage they see now and when they think they can reopen, and what the economy will look like when we do? Will they have customers? Will they ramp up rapidly? What do you see from Cleveland?
Right. So we're all working on this right now. As you know, Governor DeWine of Ohio is doing daily press conferences, and he yesterday said that he's aiming for May 1st for some type of reopening. But, of course, that reopening is going to be done very carefully and staged, because no one wants to go backward. And so really it's really thinking through now what those criteria would be. You know, and we have some examples of firms that did stay open as essential companies of how they've been able to do it. For example, grocery stores. So taking some of the lessons about how do you do social distancing within a store, how do you do social distancing within a manufacturing plant, and trying to apply those. So, you know, my view in talking to the firms is everyone realizes that everyone wants to kind of get back to work, but everyone realizes that how you do that really has to be done very carefully. And so we expect to see social distancing practices continue. Certainly, you know, personal protective equipment like masks and gloves will be part of that. So it's got to be done very thoughtfully. Some things we'll be able to reopen that make it, you know, that can do social distancing more easily than others. You wouldn't expect to see big conventions or even conferences where you have people, a lot of people around. You have to be very careful about how you do it. But everyone kind of has a goal of wanting to kind of get back to opening up activity. You know, partly because when you think about it, this is very painful for small businesses. Some of them have had to shut down. Very painful for people that have lost their jobs in certain sectors, are bearing the brunt of this. And so this is why I think you've seen unprecedented action at both the Federal Reserve and at the federal government level of trying to mitigate the negatives on the economy from the appropriate policy of social distancing and shutting down the activity in order to get the virus under control.
Well, do you think maybe markets are getting a little bit ahead of themselves in pricing in a very rapid recovery at this point? When do you think we start growing again, and how quickly?
Yeah, so, I mean, as you've seen, I think that there are going to be different parts of the country that are going to feel that they're capable of bringing back some businesses when the virus has kind of gotten to a point where the curve starts to flatten and then move down. So you're going to see that not all of businesses and not all parts of the country opening at the same time. So as that happens, you would expect to see, at least in terms of numbers, in terms of percentages, looking like they're moving back up, right? When you go from a zero base to activity, you're going to see some increase in terms of the percentage rise in some of those numbers. But that nowhere implies that, right, we've made up what we lost by the shutdown. And so, you know, you might see some of the numbers of like percentage growth and output looking like they're coming back, you know, maybe in the third quarter if things start to open up in certain areas. But again, that doesn't mean that you're truly back to, you know, activity being back to normal. It's just going to take time, right? If you're a manufacturing plant and you don't have, you know, supplies, it's going to take time for you to kind of bring back your workers, you know, get the supply of inputs that you need to start picking up activity. And then, of course, it depends on what demand you're going to face. So I think it will take some time for the economy to kind of pick back up. And right now, we're still in the phase of making sure we get to that point without, you know, as best we can, with trying to limit the damage, the economic damage, and get people so that they can sort of resume things in the best way possible.
Loretta, we're up against the clock, so I want to jump in and get as many questions in as possible if we can. I don't want to be tone deaf to what's happening in the markets right now. We have a 17 handle on WTI crude. We have some real risk in the high yield space of defaults, yet people have been encouraged to pile on that risk in the last week because the Federal Reserve has suggested it will go into high yield. Can you see why that's encouraging risky behavior at a time when maybe we shouldn't be doing that?
So we're in a real unprecedented, incredibly deep shock to the economy. And I think it behooves us at the Fed to really use our tools as best we can to get us through this pandemic shutdown period, mitigating the negative impact on the economy so that the recovery can be as best as it can be when we get to that point. Yes, we are moving into unprecedented territory, but remember, we're trying to then lend to firms that, through no fault of their own, were impacted by the virus. And so there are, we are going into, for example, corporate debt programs, which we haven't done before. And we are going to include some fallen angels, right, that, had an investment grade rating before the virus hit. So you're right that we are doing things that we hadn't done before. But at this point, I don't think we can be that concerned about those kind of moral hazards. I really think we have to really look at, this is a hugely impactful and negatively impactful shock. And we have to do all we can to make sure that we're not doing permanent damage to the underlying fundamentals of the economy so that when the time comes and activity can pick up, we can get a decent recovery out of this.
A lot of what you just said will make sense to a lot of people. Where people struggle, though, Loretta, and maybe you can help us, buying double B credits that were triple B before this might make sense to tons of people. They're huge employers. Buying high-yield ETFs that have triple C credit in them, exposed to a very shaky energy sector that weren't on firm footing before this, doesn't make sense. Why the decision to buy junk ETFs?
Yeah. So part of what we're doing and all the things that we're doing are twofold. One is, right, we're trying to make sure that the markets stay functioning. So some of the efforts that the Fed has done, right, are really geared at market functioning, and some of them are geared to make sure that, right, we mitigate the negative effects on households and businesses by making sure that we have credit flowing to those businesses. So I look at the ETF part of that as a market functioning issue. And we're continuing to look for gaps to make sure that that our markets are functioning. And I would say that some of the efforts that we've taken already have improved functioning in the market. So there's two things going on. One is making sure that, and this is the Fed's responsibility, right, is to make sure that we have markets that are well functioning so that credit can flow, right, and do what it can to help shore up the economy to prepare it for the recovery. So, you know, we can disagree on kind of what the right way to do that is, but part of what we're doing is to try to make sure that we have functioning financial markets, precisely because those are an essential ingredient for the economy, for that any other policies that we do can flow through. So there's a transmission to the households and businesses that need those fundings.
We got about 2 minutes left, Loretta. I know that at this point, the Fed is all in, doing everything it can to try to support the economy. When we get to that third quarter, maybe reopening, and it's time to stimulate the economy, is there more you think you need to do or can do, and what would that be?
So I think we're going to have to see how what it looks like when we get there. I don't think we're up against any kind of constraint on what we can do. As you've seen, I think we acted appropriately, rapidly, in an unprecedented, rapidly way, really because of the recognition of how deep this shock was, and engineered because of the investment we're making in public health, right? So when we get to that point, we're going to look at our tools, do what we can, again, to support some of the programs that the federal government is doing, in terms of like the PPP, the Paycheck Protection Program, et cetera, and then be prepared to use our tools as appropriate to make sure, one, markets function, and two, that we're supporting the economy as we always do, so that we can get back to normal, sustainable growth with full employment and price stability. And so that's what our goal is going to be. That's what our goals always are. And we have tools to do that. Yeah. We have forward guidance. We have our interest rate tools that we're doing right now at zero. And we're going to move those things around as appropriate to make sure that the economy can recover and get back to a sustainable growth path.
Loretta, we have to leave it there, and I have to say thank you to you for your time. A conversation we will continue. Loretta Mester there, the President of the Federal Reserve Bank of Cleveland. A special thanks to our audience on Bloomberg TV and on Bloomberg Radio.
John Farrell, thank you so much. Greatly appreciate that with Michael McKee. Really, I think, important conversation, particularly there about actions of the Fed over time. Paul, let us look at the market right now. We're up 70 some future points, even up 80 future points. We got up to almost Dow 800 future points. And we've given it up off the conversations of John Williams over at CNBC and Loretta Mester at Bloomberg. Sort of a ebbing away here of the huge enthusiasm of an hour and a half ago.
Yeah, I think just a little bit of sobering commentary, Tom, as it relates to, the reopening of the economy and what that will mean, for global demand. I think just a little bit of temperance there. So, but still strong opening indicated here in the markets. But it's going to be a gradual reopening. I think that's kind of the narrative that's forming out there in the marketplace, Tom.
Head of Bloomberg Economics and all of our coverage, Carl Riccadonna, joins us right now. Carl, what I've seen not only in the John Williams comments, but Loretta Mester's comments as well, is Fed officials trying to establish a vision or a timeline forward into Q3 and, dare I say, into Q4. And both of them being very cautious about calling for any kind of the guesstimate of a bounce that maybe we see from market economics. Were they talking the book of Chairman Powell there? I mean, is this going to be the new Fed goal to say we really don't know when the bounce comes?
Well, I think that they're, really kind of writing off whatever can happen in the second quarter, and we could see a contraction of 25%. We could see a contraction of 40%. There's a huge. Any economist using a decimal point to forecast numbers in the current environment clearly has a good sense of humor, because we're talking about round numbers and even rounding to the tens place on economic projections, like retail sales, like GDP, etc. So the Fed, I think, is just writing off Q2, and to some degree, they're writing off the initial numbers we'll be seeing in the back half of the year. Because if we see a 40% contraction in the second quarter, then 10% growth in Q3 actually isn't that great. That still leaves us deep in the hole, which means the Fed has to continue to stimulate the economy. And I think one of the lessons from the 2017-2018 experience was maybe the Fed pulled back a little bit too aggressively. They had QE unwinding at the same time they were normalizing interest rates, and it ultimately proved to be too much for the economy to actually digest. And that's why we saw that market swoon in Q4 of 2018. This time around, there's going to be a Fed that really tiptoes away from accommodation.
Carl, we want to drive forward this conversation. Don't go anywhere. Carl Riccadonna with us here. And just really extraordinary, folks, the moments that we're seeing in the market action today. And, of course, it's been set up by a huge move yesterday in equity markets and really just sort of a constructive week for equity markets as well. And then this morning, and again, this goes, as we covered earlier, off the Gilead news of maybe some search for some form of drug to assist in this horrific pandemic. Up we went. We were up 70, 80 S&P points, 800 Dow points at one point, really coming in inside that bear market. Right now, with the bells are ringing, it would be appropriate to get a view of the markets. Here is Karen Moscow.
All right, Tom, thank you. And stocks are higher at the open. The S&P 500 is up 2.1%, up 58 points at 2858. The Dow Jones Industrial Average up 2.5%, up 602 points at 24,141. The Nasdaq's up 1.6%, up 137 points to 8667. 10-year Treasury up 3/32, yield 0.61%. The yield on the 2-year at 0.19%. NYMEX crude oil falling, down more than 11%, down $2.27, now at $17.61 a barrel. COMEX gold is down 0.7% or $12.90 at $17.1870 an ounce. The euro 1.0875 against the dollar. The yen at 107.34. And you mentioned Gilead. It is currently up 10.5% at $84.70 a share. Tom and Paul.
Karen Moscow, thank you so much. We appreciate that data check as we do get the markets open here. I want to bring back Carl Riccadonna, Bloomberg Economics. He's a chief U.S. economist. Carl, interesting with the discussion with Ms. Mester from Cleveland. John Farrow kind of pressed on the issue of, the efficacy of the Fed going in and getting into the junk bond market, buying, the moral hazard associated with that. What's the feeling in the marketplace as to, what the Fed's doing there? It's unique.
Well, the feeling in the marketplace is just a relearning of that lesson, don't fight the Fed. The Fed is stepping in here, guns ablazing, and I should really say bazookas ablazing, because they have aggressively intervened in markets really across the spectrum, whether it's foreign demand for dollars or high-grade, high-yield treasuries, mortgages. So the Fed is coming in size and basically taking the place of private demand in the early stages of this crisis, where really treasuries, even the deep and liquid treasury market, was not clearing. So the Fed stepped in, really aggressively bought up the supply to address these liquidity issues, and they shouldn't really be picking winners and losers in this environment. So that's why they did eventually move into the junk bond or the high yield market, because in an economic crisis is really not the time to punish those who maybe took on a little bit too much debt or didn't have the strongest of balance sheets. So that can be worked out in peacetime, not in the moment when the economy is seeing the steepest contraction in post-World War II history.
And time now, folks, at Bloomberg Surveillance for Lessons with Professor Riccadonna, brought to you by Paul Sweeney as well. Carl, teach us about the balance sheet of the Fed or any central bank as a percent of the economy, of GDP. I believe we've exploded out to 29%, our balance sheet to GDP, far less than the Japanese, far less than the Europeans as well. What happens at 39% or 49% or 69% and up? How do you study the panic that will be out there this weekend over the balance sheets exploding?
Well, so far the expansion of the balance sheet has taught us a couple of lessons. So one, the Fed and central banks clearly had the ability to expand their balance sheets to support the economy through monetary accommodation, be it via unconventional means. So first of all, they had the leeway to do it. The second lesson is really what the upside limit is. And I'm glad you highlighted the experience of Europe and Japan, because that at least tells us that we have more leeway. At some point in the future, we will get to a point where the central bank hits the upper bound or potentially gets to the upper bound of what markets will tolerate, but we're nowhere near that level. And so if the central bank gets to a share of GDP where markets really start to express doubts that it's sustainable, then you start to see a breakdown in the financial system. And I don't think developed economy central bank heads have a very clear understanding of where those limits are. It's really a market tolerance issue. I pressed Jay Powell in a private conversation a few years back
about
that upside limit, and he was very cagey about where that actually should be.
Yeah, well, anytime you want to make that public, Carl, we'll pay for the dime and the payphone. Carl Riccadonna, head of Bloomberg U.S. Economics, hugely beneficial. Paul, it's very good to go from one smart guy to another smart guy.
And we can do that here, Tom. We're talking oil, Tom. We're talking oil. We've got, as you've been covering all morning, Tom, oil with a 17 handle here, down another 10% on WTI. Let's get a sense of what's really driving this near-term dynamic. We welcome Vince Piazza. Vince is a senior energy analyst for Bloomberg Intelligence. Vince, thanks so much for joining us here. We've been calling out this rapid, just incredible move down again today, a leg down in WTI. What's really behind it?
So we are filling storage quite rapidly, gentlemen. We have capacity here in the U.S., roughly 653 million barrels between refinery, tank, and underground storage. And we are roughly three-quarters filled at this time. And if you think about the last three data releases, we've had inventory additions of roughly 13, 19, and 14 million barrels. If this keeps up, we will fill acceptable working storage in just around 3 months. And so we have no place to go with this storage. The government suggesting that it would pay operators to keep production in the ground. There's roughly 365 million barrels that the government can try and hide. But that equates to roughly 1 month of production. So this thing is filling up fast. We're trying to find places to put it. We're looking at floating storage. We're already there. We're also looking at tank cars, believe it or not. So lots of moving pieces here. And, this 18 handle is likely to trend lower just because of where we are in cash costs, too.
I want to frame for this, and we say good morning to all of you spread across the central part of this nation in our energy regions. I want to go to our expert on the Midwest, Vince Piazza, Lisa Abramowitz, who used to toll into Fargo. She go in Fargo, and she go into Simonson Station, gas station on Main Avenue, 3810 Main Avenue in Fargo. And this morning, they're moving out gasoline out at $1.49 a gallon. Wholesale right now in Fargo, you know this better than me, is 10 or 15 or 18 cents on the dollar. Are we going to get back to 1960 gasoline prices?
I'll tell you, it is an extraordinary occurrence when you think about where we are up in the Williston Basin, which is North Dakota. Regional benchmarks there were sub $10 a barrel. No one's making any money at sub $10 a barrel. No one's making any money at sub 20. No one's making any money at sub 30. So it is a very precarious situation. Not only are crude inventories ballooning, but also the refined products are also ballooning as well. Consider this, guys, that we use somewhere around 20 million barrels per day. overall in this country, 2/3 to roughly 70% of that is all related in some way to transportation fuels, which is either gasoline, on-road diesel, jet fuel. So you have an entire economy completely shut down, and 2/3 of what we use has to find a home somewhere. So it's not just the crude oil barrels trying to find a home, it's also the refined products looking for a home as well. And since this is a global commodity, we're looking for storage anywhere throughout this globe, and it is filling up fast as well. If we're going to fill up in just around 3 months here in the U.S., the global storage capacity is also filling up quite quickly. The OPEC production agreement doesn't really do much. It just delays the inevitable because even taking that into consideration, we are likely to fill global storage capacity in just around the same time as well.
All right, so Vince, I'm going to ask the naive question of the day. Why don't they just stop pumping?
Well, look, you have to keep the lights on, right? And so if your cash costs here in the U.S., you take consideration your LOE, your G&A, your interest expense, you got to pay your debt, or else you are really shutting your doors down. So in some of the work that we've done, we've seen somewhere around between $15 and $16 on LOE, your production taxes, your G&A, and your interest expense. So you're going to keep the lights on so you can pay your debt. And that is the important factor here, right? Is you need to pay that thing that keeps your lights on. And credit is the lifeblood of this industry. And so they need that capacity. They need that availability. And we've seen operators draw down just to keep the lights on.
Right. Vince, got to leave it there. Vince Piazza, thank you so much. Running energy for us at Bloomberg Intelligence. And this is with Brent crude. This is published Brent crude, $28.12 a barrel. The price on the futures market way below that, $18, $19 a barrel. West Texas, $17.86, down 10.1% this morning, bouncing off that historic bottom that we saw 40 minutes ago or so. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. The coronavirus is slamming Michigan with skyrocketing unemployment, 25%, the third highest in the nation. Some in the state are protesting to get back to work. 4 sheriffs are saying they won't enforce strict stay-at-home measures. Governor Gretchen Whitmer responded today on ABC's Good Morning America.
4 sheriffs out of 83 sheriffs making a point, that's fine. You know what, I can take it. If it makes people feel better to take their frustrations out on me, that's fine. All I ask is let's not get overly political here.
Whitmer says she's considering relaxing some restrictions May 1st, but is working with a coalition of Midwest governors from both sides of the aisle to coordinate reopening. Like many other states, Nevada closed all non-essential businesses to stem the spread of the coronavirus and encourage social distancing, including the Las Vegas Strip. Now Mayor Carolyn Goodman says it's time for the city to reopen, saying that the economic risk of remaining closed is too high for the city.
It's a terrible, terrible thing we're under because of the people we lose. We don't want to lose anybody, but it's part of life. And so I want people back to work.
Goodman says it's not fair to keep 3.3 million Las Vegas people from earning a living. China's official death toll from the coronavirus pandemic has jumped sharply. The hardest-hit city of Wuhan announced a major revision that added nearly 1,300 fatalities. The new figures result from an in-depth review of deaths during a response that was chaotic in the early days. The revised numbers push up China's death toll to more than 4,600. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. The Dow up 488 points, 24,022 on the Dow. Standard & Poor's 500, 2848, up a solid 49 points. That's not where futures were 2 hours ago. They were up even more. They've given it back a little bit again. The Dow up 491 points, up well over 700 points on futures a few hours ago. Much of that coming off 2 conversations, one with John Williams and then with Loretta Mester of both of the Fed, the New York and Cleveland Feds as well. The VIX 39.49. Still a more attractive number with less fear today, but 39.49. Yields come in, 2-year yield, well below 0.20%, 0.1979. And as we have done all morning, including that snapshot of the oil market with Vince Piazza of Bloomberg Intelligence, West Texas Intermediate truly making history. Back to pricing of 2001 and early 2002. $17.91 a barrel, down $2, 9.7%. Stay with us. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury in the time of coronavirus. The U.S. may start going back to the movies in July, although the experience will probably look different, according to Cinemark. The country's third-largest theater chain is bullish on a summer blockbuster reopening, but with half capacity and limited hours. Reopening plans are based on statements from health officials and conversations with studios. And of course, if Warner Brothers still releases the new Christopher Nolan action film Tenet and Disney sticks to its new July date of Mulan. In the meantime, the world's richest person is getting richer as we all stay home. With Amazon's record stock climb, Jeff Bezos' net worth has reached over $138 billion. Bezos isn't alone. The Waltons have also seen their fortune up 5% this year, even as non-billionaires are cashing in. UBS Group is seeing ultra-wealthy clients ramp up borrowing to place more wagers in what they see as a cheap market. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Global news.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in a front office, and when I was 14 years old, my family moved back from Sudan to America. I went to high school here in New York
Find these
City.
and more NBA podcasts right here on TuneIn. With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And a
I'm Karen Moscow. Stocks are extending a weekly advance as investors speculate the U.S. economy would soon begin to emerge from a lockdown amid a glimmer of hope in the race to find a coronavirus treatment. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 is up 2%. It's up 55 points at 2854. The Dow Jones Industrial Average up 2.2% or 524 points at 24,065. The Nasdaq up 1.1%. Tom.
Karen, thank you so much. As I mentioned, yesterday was a grim day for the case development of this crisis in New York City. We need an update. Here's the 109th mayor of New York City.
Again, I think it's amazing how much people have, in the midst of this crisis, figure out all sorts of new ways to keep going, all sorts of new ways to keep connected to their loved ones, their friends, all sorts of new ways to entertain their kids and teach their kids. You know, folks are staying connected and sort of creating a whole social life. Even if it's virtual, people are doing amazing things to, you know, keep that sense of community, keep that sense of heart and soul of this city alive, even through this crisis. And it is a beautiful thing. It's a horrible backdrop. None of us wants to be in this, but what's beautiful is the way New Yorkers have responded. The creativity and the warmth and the kindness and the sense of, you know, making something out of nothing, even if we don't have the things we want, still finding a way to keep going and to stay connected and to stay hopeful. So everyone wants our freedom back. We all want our lives back. We all want to experience the things we love about this city. And the question is always when? How quickly can we get there? I feel that too. I want us to get back to normal as quickly as possible, and I'm going to move heaven and earth to get us there. It's my responsibility to, as quickly as possible, take us through those stages. But I want to remind everyone, we got to go through those stages. We got to get out of this stage of widespread transmission of this disease. We've got to get to a much better place to be able to start getting back to normal. And that means sticking with the things we're doing that are working. And I will always say thank you to all of you for what you have done, the way you've adopted shelter in place and social distancing and made it work, made it come alive in the probably the hardest place in the whole nation to do it, but you've done it. And it is moving us forward. But we have to be smart about what we do next. To get back to normal, we have to be really smart and careful about how we go through those stages. We have to make sure we move steadily and carefully and don't create a boomerang effect where we go too fast and then the disease reasserts and then we set back the timeline much longer for when we can get back to normal. So I feel what you feel. I miss it too. I want to get us there, but I want to make sure we do it safely. In the meantime, I've talked yesterday about the 4 things we're focused on: making sure people are healthy, safe, have food on the table, have a roof over your head. That's the focus now. Beating back this disease, doing it smart stages till we can get there. Now, to get there, here's the thing, here's the truth. There is no way to get back to normal without a huge amount of testing on a citywide level. Something we have never had, we've never seen since the beginning of this crisis. Now, undoubtedly, we need a lot of help from the federal government to get that done. We are not just sitting back waiting because we've been waiting a long time for that federal help. It still hasn't come. We're taking matters into our own hands more and more. We finally found a way to get a large number of test kits on the open market. We finally found a way to produce our own here in New York City, which is very exciting. We're going to see how far we can take that. But we still need help from the federal government if we're really going to have the testing on the scale necessary to get us to the point where there's many fewer cases of COVID-19, where it becomes a rarity and where we can get back to normal. In the meantime, we're building out testing every day. As we're finding a way to get more kits in for testing, we are building out testing every day. And what I announced earlier in the week, I want to give you some important updates on how community-based testing is going to grow over the next few days, going into next week. And this will be something you'll see more and more of. But again, this is just a beginning compared to where we need to go, which is very widespread testing so that we can really turn the corner. Now, to really think about what that looks like in the future, imagine that any time we needed to know if someone had this virus or not, at any given moment, there was a test available for that person immediately when they needed it, and that we could get a quick response. When someone had the coronavirus and we needed to guarantee they were ready to go back to work, that we could have the test we needed exactly when we needed it and a quick response. That we could use that testing to make sure anyone needed to be quarantined was quarantined right when they needed to be. Imagine that, how different that has been than what we experienced, but testing everywhere all the time. That's where we have to get. But this additional community-based testing is going to help us a lot, because at least in the meantime, we can focus on addressing some of the greatest needs in the city and some of these very painful disparities that have become clearer and clearer in this crisis. Now, to remind you, where did we focus initially? We didn't have enough testing, but the testing we had, what did we do with it? We focused on saving lives, testing for the folks who are most vulnerable, who are literally the patients in the hospitals that the doctors and nurses were most concerned about saving their lives, and the test would tell them what they needed to know. That was job one. Protecting those healthcare workers was the next thing we had to do to keep the hospitals going, to make sure they could serve us, and if they needed to be home, if they needed to be quarantined, that they would be. And of course, our first responders, keeping them healthy, keeping them safe, knowing who could be on the job, who needed to be home, who needed to be given care. That's how we set up with the limited testing we had. Now we're focusing on the groups of people in this city who have been hardest hit by this disease, and in a very, very pinpointed way. So we're talking about folks in some of the lowest income communities in this city, people in communities of color that have borne the brunt of this crisis, immigrant communities, but very targeted to the places we've seen the biggest problems, and the individuals who are suffering the most. Obviously, we've said from the beginning, folks who are older and have those pre-existing conditions. Those have been the folks who have been most vulnerable throughout this whole crisis. That's where we want to make sure the testing goes first. So last Sunday, I told you we'd be opening up these community testing sites around the city, all run through our public health system, health and hospitals, and directly serving those hard-hit areas. So today, the first centers open at Gotham Health in East New York and Brooklyn, at Gotham Health at Morrisania in the Bronx, and the Vanderbilt Health Center in Staten Island. These will open today. On Monday, at the Sydenham Health Center in Harlem and Manhattan, at the Queens Hospital Center on Monday as well. Health and Hospitals, Queens Hospital Center in Queens. Those 5 locations, some opening today, some opening Monday. Now, what's the way it's going to work? This is specifically, again, about focusing on people with those pre-existing conditions who are 65 or older and live in those particularly hard-hit areas. So these test sites will be walk-in sites. It will be based on serving people who meet those particular criteria, and we'll get more details out today. The way for people to access that testing is to call 311 so that people going in, we know exactly who needs the test, who meets those criteria, comes from the community. We can tell them when to come in. There will be initially 2,400 tests per week across those sites, but that's going to ramp up quickly. I want to see that number double quickly. And that will depend, of course, on getting the test kits in that we expect momentarily. But once they're in, that will give us that supply. And the PPEs, and this has always been a bit of a struggle, to say the least. We're looking better for next week, but we have to make sure we have everything we need, and, of course, the personnel as well. So those are the things we need to put together, but I'm feeling more confident today than even a few days ago that those pieces are all going to come together, that testing capacity will be up and running for those communities. As I said, some opening today, some opening Monday, and then we're going to ramp that number up as rapidly as possible. We want to reach everyone we can reach to keep people safe. That's the bottom line, and to particularly keep those safe who are most vulnerable. We're going to accompany that with information and education, because the test is important, to say the least, but people need to know what to do with the results. And I want to remind all New Yorkers, if you test Negative today, it does not mean you're out of the woods for good, and you still have to be very, very careful and cautious, particularly if you're one of those folks who's most vulnerable. It does not mean a negative test today is an all clear for the weeks ahead. It's not. Got to still be very careful. Still take those precautions. Positive test tells us something, of course, very important. And for folks who are vulnerable, that's a very tough moment when they get that positive. But it tells us immediately what we need to do to help them. It also confirms how important it is for anyone to test positive to isolate from the people in their life and in their household to the maximum extent possible. Now, some households can do that more easily than others, depending on how your apartment or your home is laid out. There are a lot of people in this city who don't have a hell of a lot of choice because they're in a very, very tight circumstance in their home or their apartment. Some families doubled up, tripled up, particularly for folks who can't socially isolate at home properly, especially if they're symptomatic or even more so if they have a positive test. We want to make sure there's alternatives available. So I announced yesterday, again, 11,000 hotel rooms coming online immediately to help folks who need to be quarantined. This is all moving quickly. So anyone who needs that quarantine, who's in a situation where they can't properly socially distance from the people around them, again, they're symptomatic or they have a test positive, if they want to be in one of the hotel rooms, it will be provided to them for free. So that's available now. We'll be acting on that immediately, and it will fit directly with this community-based testing. Okay, so that's one important piece. We also have to keep our focus always on our healthcare heroes. And they already are a priority for testing for sure, but we want to keep deepening those efforts. So we are partnering with a private healthcare organization, One Medical, and with a labor union, 1199 SEIU, that represents so many healthcare workers. And together we'll be opening 5 new test sites beyond the ones I mentioned previously, 5 additional test sites, 1 per borough. Brooklyn and Queens will open now. Staten Island, the Bronx, and Manhattan will be open on Monday. So these sites will be up and running quickly. Their testing capacity will be about 3,500 per week. And again, this is one where we're going to be really clear about eligibility. The frontline healthcare workers who are members of 1199 SEIU will have the opportunity to go there. Essential workers, including employees of adult care facilities and employees who care for people with disabilities. This will be sites where they can get tested. And these people do such important work. I want to say to everyone who's in those adult care facilities, everyone who's caring for people with disabilities right now, again, you are among the unsung heroes of this crisis. It has not been easy for you. You deserve the praise and appreciation, and you deserve the opportunity to get the protection you need and the testing you need, and this will be part of how that happens. And then beyond that, these sites will be open to New York City residents in each borough, 65 years old or older with pre-existing conditions. So sticking to that notion of the focus on folks who are older and have pre-existing conditions. So thank you to 1199 SEIU. Thank you to One Medical for this great effort. We're happy to partner with you, and that will expand capacity greatly. Anyone who needs to schedule an appointment and fits those criteria, you can call 1-888-1-MED-1. So it's 1-888-1-MED-1. It's ONEMED number 1. Or go to onemedical.com and use the code NYCCARE30. So between those two efforts, 10 new community-based testing sites in the places that need it most, scaling up fast. But again, this is a small beginning of where an example where we really need to go, which is truly widespread testing so we can get out of this phase and move forward. Now, talking about getting out of this phase, it's important to recognize it's not going to happen overnight. It's going to be a long fight. But if we get it right, we will thank ourselves. If we get it right the first time, months from now, we'll look back and say, thank God we did that. One chance to get it right. That is what I believe is true for New York City. And this is a conversation I had with the President of the United States. I said, there's one chance to get the restart right. if you rush it, if you ignore the warning signs, if you minimize the dangers, you're going to end up with a boomerang effect. And that's the last thing we want to see. So we're going to do this step by step, be smart about it. And we understand it's going to take a while. We understand it won't be pleasant. No one wants to go through this. But we are going to appreciate it because we're going to get it right. We're going to appreciate it when we're down the line a few months and we actually are able to steadily move towards normal and not see that boomerang effect. And so we got to be smart about what to prioritize. I told you over and over, safety, health, food on the table, roof over your head, those are our core priorities. And we think about what we're going to allow and not allow going forward. It fits those priorities exactly. So one of the things we think about that we love about this city, but doesn't fit those priorities, to be honest with you, is a lot of the special events. We look forward to them all year. The parades, the street fairs, the concerts, the festivals. It's a lot of what makes New York, New York. It's a lot of what we cherish. Literally, we look forward to it 12 months a year until that day comes. We love those events, but what do we know about those events? It inherently means large numbers of people crowded together in a pretty small space. That's New York City. That's who we are. But guess what? That goes against everything that we need to do to fight back the coronavirus. So we have to be smart. We love those things. We'll miss them when we don't have them, but they will be back. They will be back. And by knowing when it's time to temporarily let them go so we can get to a greater goal, we're going to actually look back and say that was the smart thing to do. So right now, events in this city that had been permitted by our city government through April, those were already canceled. And we missed those already. But now it is time to be clear that non-essential city permitted events for May need to be canceled as well. Not happy to tell you that, but I want to tell you the honest truth. It is the smart thing to do to protect the health and safety of New Yorkers. I don't think many of you watching right now are particularly surprised by this concept, but I think it's important to say it out loud and lock it in so people know what's really going on and so people can plan, including these people who put together these amazing events, and we really honor them. We appreciate them. They do something so special for New York City every single year. They deserve some certainty too. So things like the Brooklyn Half Marathon, things like Summer Stage in Central Park, things that were going to be happening in May or starting in May, we are making clear we're not issuing any permits for the month of May. We're canceling those events. Now, I want to be clear. These kind of permits are for special events, community events, cultural events. This does not mean permits necessary for any kind of medical site. Those, of course, will continue to be approved. For hygiene stations, those will continue to be approved. And for anything related to food, one of those four basics we're focused on. Farmers markets, meal preparation, meal delivery, any sites needed for that will, of course, be permitted. And the same goes.
That was Mayor Bill de Blasio of New York City giving his daily briefing on the COVID-19 crisis. Lisa, giving us some latest. I think a couple things I took away, Lisa. One, ramping up the testing center starting today and on Monday. You'll have a total of 5 testing centers, one in each borough. So that'll be, the beginning of a very important stage for the city to try to get a better handle on what is going on in terms of the spread of the virus. And then the second takeaway was not surprisingly canceling public events for the month of May, extending that cancellation policy from April into May, Lisa.
Yeah, we already have gotten news about public schools being canceled for the remainder of the year, something that's looming large for many individuals around the world, around the city. Myself. Right now, we want to turn to markets where we're seeing a rally, despite some of the gloom and doom and despite the fact that a lot of economies are still closed down. On this optimism, perhaps we are starting to see a plateauing and a decline in the number of deaths, the number of cases. Dave Wilson, Bloomberg stocks editor, joining us now. Dave, one thing I'm struck by that I find just fascinating is the underperformance of most stocks and the outperformance of big tech. Can you talk about that?
Well, let's face it. It's like you go with the horse that brung you, so to speak. I mean, we've seen those bigger companies really leading the way. Although today, I mean, we should point out one of those big companies, Amazon.com, kind of getting caught in a move away from what you might call the stay-at-home stocks, the kind of companies that have benefited as people have been forced to stay home or have decided to stay home because of the coronavirus. Amazon's down like 0.6%, but you can look across a whole bunch of stocks. I'd point out Netflix down 2.3%. Zoom video, we're all on screens as opposed to being together. So Zoom has really taken off in terms of their business, down 3.3%. Slack Technologies, to the extent that people are working at home and need to communicate, Slack provides that software. It's down more than 3%. So, you've got the sense that people really are kind of looking ahead to when things kind of get back to what passes for normal. I mean, you can see it in Boeing, especially. Stocks up more than 11.5%. They're going to restart production of planes next week that had been cut off since March 25th because of concern about the spread of the virus. So, there is this sense of getting back to normal. Of course, Gilead Sciences, another example. I mean, we had this report out of this medical news service Stat talking about how their drug remdesivir, which is already used to combat some viruses, has proven effective so far in tests on coronavirus patients, COVID-19. So you got that stock up 8%. So, some positive signs here.
Dave Wilson, Bloomberg Stocks Editor, thank you so much. As always, you'll be joining us again in the next hour. Market Drivers is brought to you by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit commonwealth.com to learn more. Let's learn more about what's going on in the world and the nation. Nathan Hager has those headlines for us. Nathan.
Well, good morning, Lisa. President Trump is now giving states a roadmap to reopen as the coronavirus pandemic plays out, a three-phase approach that mostly leaves tough decisions on timelines, testing, and securing medical equipment against COVID-19 to governors. Las Vegas Mayor Carolyn Goodman says she's eager to get things going again on the Strip.
Best move forward and start opening so we can have business here to sustain the state and the people that call this place home.
A Democratic presidential hopeful Joe Biden calls the White House guidelines a punt.
It seems to me there ought to be something that focuses on how do you get as many tests done as possible to allow some elements of the economy, some elements of society, be able to get back to some sort of normal.
White House Coronavirus Response Coordinator Dr. Deborah Birx says there is enough testing for people with symptoms and their contacts. Congress is under new pressure to act on replenishing small business aid. That's after the $349 billion Paycheck Protection Program ran out of funds yesterday. Bloomberg's Kathleen Hunter reports Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi remain far apart on negotiations. As Senate Minority Leader Chuck Schumer tells MSNBC the Democrats' talks with Mnuchin have been productive and will continue into the weekend. A crew from the International Space Station has landed in Kazakhstan and into a much different world due to the coronavirus. The three astronauts spent more than 200 days in space. Their recovery team has been under tight medical supervision for nearly a month. Global news on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
In these times of loss and crisis, the people you trust to ask the questions you need answered become even more vital.
Should the president, though, impose the Defense Production Act?
Carol Masser and Jason Kelly.
Help us understand what we know so far.
Bloomberg Business Week.
They are on the front line of the impact of the coronavirus.
Weekday afternoons at 2 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
There are everyday